Good evening, dear viewers. I'd like to extend a very warm welcome to the next Goldvorsorge webinar with the topic From Gold Rush to Sell-Off. My name is Stepan Pilic and I'll be your host again today. It's wonderful to have you with us. In recent weeks, the situation has escalated noticeably. Physical gold is becoming scarce, while at the same time, warning signs of a real estate crisis in 2026 are mounting. The stock markets are on edge. The word crash is already making the rounds, and the US is heading for a debt fiasco, with the US dollar losing steam. That is just a small sample of the many current topics from the last 5 weeks. Our trio of experts has sorted through them for you and will break it all down today. And I'd like to welcome our first expert, Mr. Christian Trinker, an expert in secure asset management and high security storage. Good evening.
Yes, a very good evening. I'm delighted that you're all with us again.
A regular fixture of our webinars is Mr. Nikola Draguljevic, Head of Wholesale and an expert in market analysis. He is currently at the Dubai Precious Metals Conference and is joining us live from Dubai today. Good evening.
Good evening, dear viewers, from me as well. As Stepan mentioned, I'm joining you today from warm Dubai. I'm very much looking forward to this evening, as we'll be reporting on many new current topics and will, of course, answer your interesting questions afterwards. So please sit back and feel free to write us anything in the chat.
Indeed, and to round out our panel, a new face in our group of experts, Mr. Ulrich Hanton, the branch manager of Goldvorsorge in Dubai. He manages international key accounts and brings fresh insights from one of the most dynamic precious metal hubs in the world. A very warm welcome. Good evening. I'm delighted to be in front of the camera today as well. Yes, those are our experts. And before we start, I have a few important notes, especially for our new viewers. Throughout the entire webinar, you can use the private chat function to send your questions directly to us. You'll find it on the top right of your screen. At the end, our experts will take the time to answer most of your questions in detail. If you'd like to place an order or request a consultation today, our hotline is staffed continuously. You can see it displayed at all times in one of our slides. The number is, and is already there, Gold Hotline, visible at the very bottom. And with that, I'd say let's start the webinar. When paper is shaky, people reach for something tangible. Many countries are currently seeing it this way and are also putting this into practice. What does this plan look like in concrete terms, Mr. Trinker?
Once again, a very good evening to everyone. Today, our topic is the gold rush. And gold is truly making a comeback these days to its original role, and that is as a currency. While the headlines in the mainstream media focus on stock indices and interest rate decisions, something else entirely is happening in the background, namely one of the largest monetary policy shifts of our time. As many of you already know, since this year, they've been discussing, well, there were talks before, but the BRICS nations are now discussing this publicly and formally. So BRICS, that's Brazil, Russia, India, China, South Africa, as well as some new additions like the Arab Emirates, for example. So all these interesting resource-rich countries are discussing and planning the introduction of a new gold-backed trading currency. So not a currency for everyone like the euro or the dollar, but a trading currency. And this is intended to serve as an alternative to the US dollar, because the US dollar has dominated the global financial system for decades. But that's changing now, because this time it's not just about a currency, it's about, let's say, trust, independence, and control. And what does that mean? For millennia, gold has been the foundation of every stable currency. Then the gold standard ended in 1971. Since that link was severed, our money has been based only on promises, on the belief in money, as crazy as that sounds. So on credit and not on substance in reality. And today, more than 50 years later, the world is approaching its all cycles, and this isn't the first time Now the world is slowly returning to that substance, to this real, genuine commodity. And currently, central banks worldwide are buying more gold than they have since the 1960s. So, what official figures show is that over 1,000 tons annually are flowing into the vaults of various countries, but especially in those countries that, and this is where it comes full circle, no longer want to accept the dollar as the sole reserve currency. There are many different reasons for this. Of course, politics plays a big role. But if you look at China, India, Russia, the Gulf states, and of course parts of Africa, which are also very rich in resources, they are now increasingly using gold as a hedge against geopolitical risks and sanctions, right? So the message is quite clear. Whoever owns gold controls their own monetary policy. Whoever owns dollars trusts in the policies of others. And for many decades, that's how it was. Everything was, so to speak, tied to the dollar. But now there's this BRICS concept. Let's say the concept is called the unit, right? The BRICS unit is supposed to be a gold-backed unit, but not a classic means of payment. You don't go to a store and buy with a unit, I don't know, your radio or groceries, but rather it's a unit of account, right? Which is intended to be used in international trade. It's also very, very cleverly thought out. It's intended to give the member states the opportunity to conduct their business independently of the dollar. Because what many people don't know is that for most energy or commodity trades in recent decades, you always had to convert to dollars, even if both countries making the deal actually had nothing to do with the dollar, right? So if a Brazilian company with a, I don't know, Chinese company makes a deal, it's also somewhat hard to understand why it still had to be done in dollars. There you can see, of course, the World Power USA, which had its hand in it. And mainly, of course, this was the case in energy or commodity trading. It's still the case, but it's slowly changing, right? And now there's a new precious metals exchange that was founded as part of this development, this whole BRICS unit story. And on this exchange, transactions are already taking place where physical gold serves as collateral for these transactions and no longer the US dollar, right? Now, almost 70% of, you have to imagine, so more than 2/3 of BRICS trade is now conducted without the US dollar. This is actually the word turning point is always so cliche, but it really is a turning point, and the trend is continuing to rise. So the goal here, of course, is not to eliminate one country, but simply there will be a multipolar financial order, not two, but several, right? And where no single country is supposed to determine the entire monetary system. That's the idea behind it. And gold is ideal for this because it's borderless, it's neutral, and it's nobody's debt, right? Gold has an intrinsic value. And if you look at it from the whole geopolitical perspective, so behind this technical idea, there's a political message that trust in the dollar as the world's reserve currency is declining. There are many reasons for this. Not necessarily because the USA is now economically weak, but because its monetary policy is increasingly perceived by many countries as a political tool. And the BRICS nations want to balance this power structure. Yes, they don't want to eliminate it, but it's moving away from one extreme, and it doesn't have to immediately become another extreme. But this gold-backed unit, yes, the BRICS unit, if it establishes itself, creates credibility for these countries, because gold can neither be arbitrarily multiplied nor frozen as sanctions, nor can it be used as a means to an end for something. But gold simply has completely different properties. And whoever chooses gold as a foundation always chooses stability. And in this sense, the BRICS strategy doesn't stand for confrontation, but for a rebalancing of global dependencies. And whether this unit will really displace the dollar, we'll have to see. That's not entirely clear yet, but a signal is going out to everyone. Gold is once again becoming the language of trust in international trade, and that's 50 years after the end of the gold standard. So here we are in 2025. We're sitting in a world of growing debt, as you all know. There are political uncertainties all around the world. The monetary systems are politicized, and now states are returning to something that no government can control, but that is guided by physical ownership. And that is precisely the message in this development. It's not the value of gold that's changing, but the trust in paper. So I can only recommend that you also follow gold. Yes, thank you for the presentation. It sounds great that so many countries are coming to their senses and betting heavily on gold. And this very trust is also reflected in the price. Is that the main reason for the record gold prices in recent months? We need one more sound and then we can start. Yes, thanks. Thank you very much. Christian has actually mentioned very nicely that trust in paper is dwindling from day to day.
And as Stefan mentioned earlier, I am currently in Dubai and spent 2 days at the Precious Metals Conference. That actually fits quite well with the topic that Christian just mentioned. Almost every presentation talked about de-dollarization. And what is the main role of all this in the international context? The market is actually dominated, and this is particularly evident in the price increase as gold reached new record highs again in October, and this is no coincidence. For example, on October 7th, the price of bronze first exceeded the $4,000 mark, a very important mark, and just 2 weeks later, on October 21st, the next all-time high of $43.70 followed, all within just 2 weeks. The main triggers were a threatened US shutdown, fears of recession, and the expectation of further interest rate cuts. But already on the 22nd, in October, 1 day later, the counter movement came again, a correction of more than 6%. And many investors then asked me, have we already reached peak prices at this moment, or is this just a brief respite? And precisely such price jumps, like those we have seen in recent weeks, are rarely speculative, because the gold market reacts to the perception of risks, such as the de-dollarization, etc. And as the risk of a government shutdown in the US increased, investors logically sought safe havens. And gold was the logical answer in this case, and in most cases, it is the logical answer for investors. Because gold has no counterparty, no credit risk, and is not subject to political intervention. At the same time, however, concerns grew that the US economy could slip into a recession. And bond yields began to fall, and expectations of interest rate cuts rose accordingly. And whenever capital flows from the interest rate market into the security market, gold benefits. And this dynamic then pushes the price above the psychologically important mark of 4,000 euros. And historically, such a steep movement is usually followed by a short period of relaxation, as was the case the following day, the 22nd October. And this was mainly due to profit-taking by investors. Because immediate security has slightly decreased, investors have taken profits on the paper market. Furthermore, the discussion surrounding the US shutdown calmed down, and some market indicators pointed to a stabilization. But this correction is not a sign of weakness. That's very important. It shows that the market functions. So overheating is reduced and new buying levels emerge. And exactly these buying levels are especially important for you out there to add to your positions or to get into the market. Yes, we especially recommend this at levels like the ones we're seeing right now. But you have to consider that we are in an environment where gold doesn't just react to crises, but to systemic changes. Yes, Christian mentioned it earlier, central banks are buying record amounts, trade conflicts continue to be a factor, geopolitical risks, and falling real interest rates. Yes, and And that's also the main reason why most people then shift into precious metals, or let's say why most people shift their capital into precious metals, which then leads to those price increases. Yes. And that's why every pullback is less of a warning for us and more of a moment when the big long-term investors are always repositioning themselves. And that's exactly why we, or rather private investors, also need to reposition in these moments. And the mark of 4,370 US dollars that I mentioned earlier isn't the end of a movement, but a symptom of its strength, the strength of gold, yes? And short-term fluctuations are part of it. That's completely normal. They also cleanse the market in a way and restore balance. All the speculators are then out of the picture. So structurally, gold remains on course. Yes, so that's very important. Debt is growing. Christian mentioned it. I've also heard it here in the presentations. The dollarization is advancing. And especially with topics like the ones we have now, gold always remains the stable solution, and the next all-time highs are on the horizon.
Yes, absolutely fascinating. Thanks for the yes details. You don't hear them with such precision everywhere as you do with us. Price movements, I believe, was the key word. They would be hardly conceivable without the massive increase in trade. What's happening behind the scenes, Mr. Tinker? To answer that, well, it's like, as you just said, actually, generally speaking, in the mainstream, as I like to call it, you hear so little about these things. They're like puzzle pieces that then fit together to form a much bigger picture once you have that information, yes. And that's just how it is. As I said at the beginning, when I was talking about the BRICS unit, a lot is happening in the shadows of this mainstream. Not because it's being hidden, but simply because it's not being reported on, at least not so much in our media. And that brings us to some additional information. The BRICS nations have unanimously agreed on this new BRICS unit in order to move gradually towards a more multipolar development and away from their previous dependence on the dollar. And as part of this ongoing development, the BRICS countries have already taken several other significant steps. They have, in fact, founded their own precious metals exchange. And this exchange trades gold, platinum, rare earths, and this is very important, which are, so to speak, the vitamins of the industry. And everything on this exchange is traded without the US dollar. This is a step that's more than just a small technical trading project. It's also a major symbol, just like the BRICS unit itself. This exchange, which is an extension of that, where other things are also traded, represents a new phase in de-dollarization. And this isn't because everyone is so malicious and no longer wants the dollar. Rather, it often makes no sense at all to settle transactions in dollars. It's nonsensical and just costs a lot of money when you don't actually have anything to do with the dollar. And with the dollar, people simply want to break free from this dependency. That's one of the underlying reasons. And this exchange is the strategic tool to achieve that. As I said, for decades, global commodity trade has been settled in US dollars. That's a major position of power for the US because they determine prices, who is allowed to trade with whom, who isn't, what the outcome is, and so on. So it's an incredible power structure, and a new BRICS exchange like this one essentially builds a parallel structure. That all sounds terribly technical, but it's actually not that difficult to understand. The transactions are simply settled in the respective currencies of the countries involved. That might still sound a bit exotic to us because we're still stuck in an old school mindset, but you have the ruble, the yuan, or the rupee, and these are the currencies of countries where the majority of the world's population lives. That's a completely different dimension. And as I've already said, almost 70% is already being settled without the dollar anyway. This simply means that gold and many other important metals are now being traded between these different nations without going through the SWIFT system or the Western system. We live in the Western system, and what's happening there should be important to us. It affects all of us directly, you know? You can't separate these issues from one another. When you hear about deindustrialization on one hand and so on, and then as if it's unrelated, you hear, aha, BRICS is doing that. It's all interconnected, you know? And you have to look at it from this perspective. And our politicians should also take it to heart a bit, take it a bit more seriously, you know? And now to get back to this BRICS exchange, the central element on that exchange is, of course, gold, because gold is also the foundation there. As we've already learned, gold has no counterparty, it's politically independent, and you can't just digitally seize it, you know? And when a country trades with gold, it moves out of the realm of promises and returns to the realm of ownership, because that's nothing other than moving away from a fiat currency towards a commodity, right? That is true ownership. And that's why for BRICS, gold isn't just a commodity, but actually the foundation of an alternative currency system. So one based on a real value. I think I'm repeating myself now, and I'm not sponsored by BRICS either, but it's important to me to also report on this, since you can hardly read about what's happening there in any other media, you know? They're also doing this to develop further, and not because they want to get one over on us, right? Rather, it's a smart long-term plan, you know? And so that's how it looks now with the new exchange. A new infrastructure is being created with transparent prices, physical delivery, and direct settlement. And this will have repercussions for the whole world. As I said, I've already spoken about the multipolar world. The plan, of course, is to reduce the influence of the dollar so that they are no longer so dependent and a multipolar financial system can be created, right? It's actually not that hard to understand. You just almost never hear anything about it over here. For the USA, it's of course a structural loss of power, but I'm not too worried about the US because they can help themselves, you know? They will adapt as well. But for the BRICS nations, and there are many countries that are still, we always use the nasty term emerging countries, but they have to, or rather have the chance to develop further. And this development simply gives them much more room to maneuver. And as we all know, of course, regardless of world politics, we know that China and Russia are already very intertwined, and they are, of course, promoting this initiative particularly strongly. Yes. And as Nicola has often told us, and will probably tell us again today, that these two countries have already dramatically expanded their gold reserves. That's no coincidence, you know? And India isn't just a bystander in this whole story. Instead, India is benefiting in many ways. They now also have their own gold smelters and a huge jewelry industry. And this creates a cycle in which gold becomes not just the asset, but truly the trading currency. A relatively quiet yet fundamental change. And you have to pay attention to this and engage with this change so that you can also evolve yourself. And by yourself, I mean all of us here, especially in the German-speaking world, where at the moment things aren't looking so rosy economically. So the BRICS exchange is more than just a political signal. It's more than just fanfare. It's a practical tool, just like the BRICS unit. The tool to, on one hand, reduce dependencies and build trust in a real commodity, and to continue developing economically in order to build prosperity in these countries. A prosperity that we've taken for granted for many decades, probably because we have it, you know, and now we actually have to make sure we don't lose it. So this exchange is still young, the volumes are still small. The concept is there, and paper currencies, as we know, are losing trust all around. The age of commodities is here, and physical ownership is gaining importance. That's just how it is, yes? Gold is becoming the neutral language of a new trade order, and whoever speaks this language will be able to trade much more independently in the future.
Yes, a great insight into this new trading exchange. Where trading happens, the source has to be right and proper. In recent weeks, the news of an exceptionally large gold discovery has been circulating everywhere. What's that about exactly?
Yes, that is, of course, more than just a curiosity. There's more to it, but it's also, let's say, perhaps being exploited a bit by propaganda. And I'll get to what it's about in a moment. But something huge has indeed been found specifically in China, yes, in the Henan province. And I don't know more about this province than its name, but one of the largest potential gold deposits of the last few decades was discovered there. Now, we often hear about such discoveries, and then there's often nothing to them. With this discovery, they're actually talking about up to 1,000 tons of gold. So you could say that's the annual production of gold. And the Chinese are, of course, very happy about it, yes, because about 300 tons of it are apparently near the surface. That has to be mined, and the deeper it is, the more expensive it is, yes. So the find was, of course, officially confirmed by the official Chinese authorities, of course, but the actual mining potential is still unclear. Now, we don't know how much of it is simply meant to be a political message and how much is actually behind it, but something about it must be true. The news is causing a bit of a stir in the markets because we are already in a very tense situation. We will go into more detail on the gold market later today and how, in some cases, waiting times, supply bottlenecks, and so on are not just coming our way, but are already here. We'll also hear about it from Switzerland. But gold is, of course, a geopolitical instrument. So the find itself is one of many such finds that you often hear about. People have often spoken of such a find in China before. Maybe something that's just propaganda. But if it's actually true, then these are deposits with a theoretically high grade. But whether it can actually be mined, well, that's something we'll only find out in the future. And in hindsight, everyone's a genius. But still, 1,000 tons. If you convert it to dollars, it's a heap of dollars. I don't have the exact conversion right now, but it's definitely equivalent to a full year of global gold production, yes. And for the Chinese, it's definitely superb because everything that comes out of it will increase China's reserves. And so China will remain, if you can believe the statistics, the world's largest gold producer in terms of mining and holding gold. Now, from a strategic perspective, you have to say China has already been in recent years heavily increasing its reserves. The Chinese central bank is buying an incredible amount of physical gold month after month. There are official figures that speak of 2,300 tons, but who knows? It could, of course, be much more, and that's not always reported in the statistics. You very often see movements and you don't know exactly who it is, but you just assume it was often the Chinese. They probably suspect or already see one. Of several topics that we will be covering this evening, one of them is the issue of de-dollarization. Yes. And that is another small but important puzzle piece that helps to make the overall picture clearer. Gold also serves to make oneself less dependent on the dollar. And every find contributes to shaking off this dependency. Yes. And of course, China doesn't want to be independent of the US financial system just for fun. They're also afraid that something might happen to the dollar and that they'll be dragged down with it. Yes. And the Chinese, of course, want to control their own currency and trade flows and not have the dollar so involved in it. So that's a very, very good approach. And a large gold find like this is very welcome for the Chinese. Of course, we know China is a huge country. It has many reserves, and the markets have reacted to this news. There was no panic because the analysts, the people who deal with the numbers, know, yes, a discovery is one thing, but until it's actually mined, that's something else. So this won't immediately have an impact on prices. But one should really give some thought to gold reserves. That's actually a lesson that can be learned from this. And China will, of course, become much more independent as a result. And at the same time, it also strengthens its position in the BRICS alliance because China is part of BRICS. So the next word we'll be hearing a lot today is the BRICS nations. So de-dollarization is one of those words. BRICS is one of the topics we'll talk a lot about because it's important. And of course, gold is somehow the connection to all these topics. Yes, the fact that this discovery is coming out right now is perhaps no coincidence either. It somehow fits into the whole geopolitical realignment of this resource policy. And whether 1,000 tons more or less are mined there, regardless, the news strengthens China's strategic position. The Chinese are also in a super strong position and are becoming more and more independent. And paper money is losing more and more trust anyway. The physical substance is becoming more and more important. That's also one of those buzzwords we'll be talking about again and again today. We are in the age of raw materials, in the age of physical substance. And the Chinese, yes, they understand that. While some, especially here, are still discussing interest rates, Beijing is securing the raw material and has built its great confidence on that. So gold remains power and will grant even more power in the future. And now on to our next topics.
The 1,000 tons of gold, it's hard to even imagine. A huge find, of course, it still needs to be mined, but yes, it's definitely some breaking news, a big story. We're staying in the East, Mr. Dragoljevich. We've already heard that Russia and China are pursuing a similar monetary, or rather gold policy. Let's take a closer look at Russia. What exactly is the strategy there?
Before I get into that topic, a quick keyword since you mentioned it, 1,000 tons of gold. In Dubai, a new world record was set yesterday. Yes, I'd like to mention this here since we've been talking about gold discoveries and resources and other things. So yesterday, the world's largest silver bar was presented at the conference weighing 1,971 kilos. So it was a huge piece, yes. You can't even imagine it. 1.9 tons in a single silver bar. And with that, Dubai has set the next world record. So that also shows you what these nations are actually promoting here and what they really value. And I don't want to stray from the topic. That's just a side note. There will also be a video about it, what the whole thing looks like, and that will go online in the next few days. But very exciting in any case. So much for that. On the topic of Russia, yes, Christian has already spoken about that as well. What's the situation with the national reserves? What about the US dollar? How is it actually traded there, yes? What has long been expected has now become a reality because Russia has almost completely sold off its remaining US dollar reserves and has permanently shifted its national reserves into gold, yes. And all of it, all the gold is also in Russia, meaning it's physically stored there. And according to a recent report I read from Reuters, the Russian central bank now holds fewer US government bonds than it has in 2 decades. Instead, the share of physical gold is rising in parallel. And in this chart on the left, you can clearly see the increase since 2004. Russia strategically bought a lot of gold at favorable prices, especially up until 2020. And from the price increase in 2020, the purchases have reduced a bit. However, they continue to buy large quantities to become independent from other countries. But strategically, that was a very good move by Russia until 2020, yes. And this shift marks you could almost say, a tectonic shift in the global financial system. Because when a state of this size leaves the dollar, it not only changes its currency strategy, but it also questions the trust in the international monetary order. Christian mentioned that very well earlier. And gold doesn't need a counterparty, so no one questions that. And it's the only asset that can neither be frozen nor sanctioned. And that's exactly what Russia learned during the Western sanctions. US treasuries can be blocked quickly, gold cannot. This means the USA now uses the US dollar not just as an international trade instrument, but rather as a trade weapon. And Russia now shares this realization with a growing number of states, as we've already heard, China, the UAE, or all the BRICS countries, in short. Russia's move actually shows that physical assets are once again becoming the strategic basis. Because gold doesn't replace a currency system, but it replaces trust in others. And with that, the global currency architecture is changing just the same. Because the more states shift their reserves, the weaker the dollar's power base becomes. Also, when comparing the currencies, you can see a clear strength of the Russian ruble against the dollar over the months, as you can see here in this chart. In July, we even had a level of about 82, meaning for $1, you got 82 rubles. And right now, it's moving again. It's moving back in this direction, around this level. Yes, this means the ruble is getting stronger against the dollar. The dollar is losing value. And for investors, this means that this geopolitical gold strategy underscores what many investors have known for a long time. Gold is not an investment, or rather not just an investment, but an instrument of sovereignty. Because whoever owns it, and here we're talking mainly about countries, decides for themselves on their liquidity, their stability, and their independence. And you also have to consider gold doesn't replace the dollar, but it replaces the trust in its longevity. Yes, that means the dollar's longevity is being called into question. And that is the real message behind Russia's decision. And Russia is demonstrating what many countries are increasingly understanding. If you want to be independent, you don't need paper money, but something that has lasting value. And so gold becomes a geopolitical insurance that, so to speak, shapes the national strategy and at the same time also brings prosperity to private investors and the citizens of that country. And that's why my recommendation is here too, do it like the countries do. Build up your own gold reserve, because that's how you achieve real independence. Because once digital currencies arrive, that will have nothing to do with independence anymore. If you have physical assets on your side, then you have, or rather your independence is then truly secured. Thank you for that description. It's also being written everywhere that state reserves are being shifted into gold. And this can be observed in several places around the world right now, not just in China and Russia. Mr. Tinker has another interesting example, Turkey. Yes, and now we're taking a world tour, or let's say we're traveling around the world several times today for sure. Now we're flying to Turkey. Before we land there, before the captain, so to speak, turns on the seatbelt sign and all that, I'd like to briefly, for Nicola, once again, I want to double underline that because it was really beautifully said. Just as the countries are acquiring their gold reserves, yes, the various national banks and whoever else in the various countries, that's exactly how you should do it too. Yes? Do it like these countries, and you don't need thousands of tons. That's not the point, but you can also have a few small gold bars. It's simple. You're building incredible security for yourself that way. And another second comment on that. In fact, with de-dollarization, this word we hear so much about today, it doesn't even mean that there are fewer dollars in circulation right now. On the contrary, the dollar is actually being used even more for trading at the moment, but no longer for investment the way it used to be, especially when the Chinese also hoarded dollars as foreign currency. That is changing or has changed completely.
What's being hoarded now is gold, right? That doesn't mean the dollar isn't used for trading at all anymore. It's losing influence, but of course it's still around. And now we have indeed landed in beautiful Turkey. Well, and what's there to report from Turkey? In recent years, we've heard a lot about this dramatic inflation that's been happening in Turkey. And it's quite interesting to see. You can also see it on the chart. It sort of anticipates what I want to say. Yes, Turkey is dramatically expanding its gold reserves. And it's also currently making history with regard to gold. So almost 800 tons, that's a hefty portion, is what the country holds in gold reserves. That's about half of the total state reserves. And that's a record high. It shows political sense, namely that they no longer, as I said earlier, hoard currencies, yes, or foreign exchange, but instead acquire something physical, That's precisely the common thread that actually runs through many or most of our webinars. And of course, again today, the age of raw materials, no longer trusting in currencies, but trusting in a physical hedge. And that's no coincidence, but the result of years of problems in Turkey, where the population has really suffered incredibly, with prices changing really almost daily. And back then, you could really only trust money if you by weight somehow, if you weighed it, yes? It was so dramatic, we probably can't even imagine that here at the moment. But in Turkey, they have the lira. When we talk about money in Turkey and the trust in the Turkish lira, that's completely dwindling, of course, yes, because the weak lira and double-digit inflation, that makes for a frustrating daily life. And so for years now, of course, people in Turkey have been immediately exchanging their savings for something else, anything but the lira, right? And until now, that's also been dollars, euros from tourists, or of course, gold. So the man or woman on the street, the common people, and the state, the Turkish state, has of course now also joined this trend and is dramatically expanding its gold reserves. And last year, almost 40 tons were added. So you really have to consider how relevant that is. This is a signal. Another one, because we've heard this several times today, gold replaces the trust that paper money used to have. And this is not a short-term reflex, but a long-term strategy. You probably already know what I'm going to say again, de-dollarization, of course. And very importantly, of course, the Turks also have to make sure they stabilize their balance of trade. That helps them with that because gold strengthens the currency reserves and it helps them when they have to import for securing payments. Yes, that's actually quite clear. If you have something valuable, you can do good business with a country like that. Yes, because there's a value backing what you're trading with that country. Yes. So the message remains clear. Gold is the stable anchor in an economy, and in an economy that is repeatedly and dramatically shaken by currency crises. And now these 800 tons of gold, that puts Turkey, if you compare all the countries, I don't know if maybe later, I think another chart will come up where Turkey is pretty much among the top 10 of the world's largest gold holders. So you have to keep that in mind as well. That also has a political signaling effect because the region isn't necessarily the most stable in the whole world. But Turkey is betting on real substance and on stability and not just on diplomacy, yes? And in this context, it's moving in the same direction as many BRICS countries and also emerging markets. We've used that word before today. More physical property, less dependence on, well, we've heard it before, the Western financial system. So in the BRICS environment, Turkey is increasingly being seen as a partner. They're not part of it yet, of course, but there have surely been and will be many talks. The Turkish gold strategy, it will fall in line with the gold strategies of many countries, but it's not just crisis management because of the high inflation. It's an instrument of power. The more gold the state has, the more independent it is from other countries, from rating agencies, from currency pressure, from any sanctions. And in Ankara, the capital of Turkey, where we've just landed, at least in our minds, they've understood that. Gold doesn't just replace trust, it creates it anew. And the lira in Turkey may well continue to lose stability, but with every additional ton of gold, the country gains strategic, that is, long-term security.
In a world we've already discussed a few times today, a world where paper money is losing its value faster and faster, one thing remains constant. Those who own gold have control.
Yes, so we've heard that gold creates independence. Paper-based systems are gradually in the long run, yes, either partially abolished or they weaken enormously. And my conclusion from this is that the main paper currency, the dollar, is currently on its deathbed and gold is victorious. Am I wrong about that, Mr. Draguljevich?
You're definitely not wrong. We've heard it several times this evening. I'll elaborate on that a bit more now. Regarding Turkey from earlier, if you look at the rankings more closely, Turkey is currently in 10th place, yes, so it's still in the top 10. And that, of course, also shows the country's strategy that it naturally wants to stay within that range and, of course, wants to remain in the top 10 in the future. Through all this buying, yes. There's also the possibility, of course, that they'll move towards the top 5 in the coming years. Yes, that's just a brief addition. To the point, the dollar is dying, or rather, gold is winning, as one could nicely put it. I've already mentioned, for almost a century, the US dollar was considered the world's undisputed reserve currency. And that dominance is now starting to crumble because central banks are buying gold at record highs. Christian just illustrated that nicely with the example of Turkey. The countries that see the real value in gold, I'd say, and not in paper, are stocking up. And the trend is, of course, clear. Trust is shifting from paper to precious metals. And the chart up here shows that the gold price currently on the left of the image, the left chart, is forming a breakout pattern similar to the one before the 2007-2008 financial crisis, which is on the right. In both cases, the price broke out of the triangle formation. And this strong increase could be a warning sign of a possible impending crisis, maybe even a currency crisis. And the US dollar might have just applied for that role. Well, we'll see. And with this strong rise in gold, as you can also see in the bottom image, of course, the short sellers are thrilled. Well, those who bet on falling prices, unfortunately not, right? Because for them, things are going doubly bad. First, they're positioned incorrectly in the market. And yes, secondly, the value of the dollar is decreasing more and more. The American currency, the US dollar, is now under pressure, not only because of its debts, but also because general confidence is dwindling. The US national debt is exceeding historical dimensions and the budget deficit is growing. The sanctions are driving more and more countries out of the dollar zone. As I mentioned earlier, for example, Russia, and as a result, parallel structures are emerging. The countries are starting to look for their own solutions, alternatives. The BRICS unit, as Christian has already mentioned, and more than 6,000 tons of gold are now in the reserves of the BRICS states. And precisely these 6,000 tons are, of course, also to be used sensibly in the future. Possibly even with a gold-backed currency or a partially gold-backed currency, which is something that is repeatedly brought up in the BRICS states. And in recent years, gold has taken on a position that one would have previously only attributed to the euro or the dollar. And over 1,000 tons are purchased annually by central banks. And that is the highest level since the 1960s. And gold now accounts for around 20% of global currency reserves. And that is more than the euro with 16%. That means gold is the only reserve that cannot be frozen and also cannot be sanctioned. And that's why all the countries are betting on it. And in a world where trust is becoming a scarce resource, gold replaces these political promises with this physical security. On the other hand, one must also consider that not only states, but also institutional investors are now following this trend. They are hedging against the devaluation of paper money, in this case, specifically the US dollar. And the financial system is thus shifting from a logic of debt to a logic of ownership. Because while fiat currencies are controlled by interest rate policy, gold is based on limitation or on scarcity by now. And it is this scarcity that creates the credibility of gold. And what's important is that the dollar won't die abruptly, but will be phased out gradually through alternatives, as I mentioned earlier. And gold isn't winning because it's new, but because it has never failed. And perhaps that is the true definition of money in the 21st century. Trust in something you can touch, and that has always had value in the past.
Yes, thank you for the presentation. The dollar dies, gold triumphs. That's kind of the motto of the whole webinar, I'd say. Dear viewers, we have already had quite a bit of information flow. I'd say let's take a breather. Let's watch a video. It's about an Austrian classic, a gold coin. Let's take a look together.
The 100-crown gold coin featuring Emperor Franz Joseph is one of Austria's most important historical investment and collector coins. Minted from pure gold, it represents imperial elegance, stability, and lasting value. Whether as a valuable gift or part of a gold reserve, this coin impresses with its history and timeless design. Available exclusively in the Goldvorsorge webshop, your partner for precious metals and long-term asset protection.
Yes, indeed, great video. I especially like the music. And we continue with our topics. We had dollars now, the ruling dollar, but perhaps not for much longer. It is therefore losing dominance, and when power shifts, new locations emerge. And the location for physical precious metals, Mr. Trinker, is
in the high security camp, of course, during golf course preparations. But this location we're talking about now, buckle up, we're on the move again. We've flown away from Turkey, crossed Asia, and are now landing in Singapore. This is also one of the important locations where the golf course has a significant high security storage facility. And yes, what is there to report about Singapore? Singapore, the city-state, has quietly, not secretly, but quietly and consistently developed into one of the most important locations for physical gold in recent years. What used to be London and New York has gradually shifted to Asia. Of course, the financial crisis of 2007 and 2008 also, this helped because a large proportion, or many of the Swiss also went to Singapore. But the reason for Singapore is clearly trust. The city-state is withdrawing capital from London and New York. Not just London and New York, of course, but those are the really big metropolises. Singapore has a neutral location between East and West and a very stable political system. A very clear and unambiguous legal framework, no capital gains tax on gold and silver. And this combination naturally makes Singapore a magnet for physical storage and international gold trading. There are institutional investors, funds, smaller family funds, and so on. They are no longer storing their holdings or not as much, let's say, in Western bank vaults, but increasingly, primarily, of course, in bank-independent high-security vaults in Singapore. And these vaults are also not subject to the reporting requirements of Western banking authorities because they are independent of banks, and they naturally offer a clear alternative to the previous classic financial centers. So Singapore is part of the power shift in this world. Singapore is also building something new, yes, and we really have to truly emphasize the significance of this whole thing. And it's called the Singapore Bullion Market Association, SBMA. That might sound familiar somehow, but it's not London, it's the Singapore Bullion Market Association. And they are doing this with their Asian partners. They have established a new clearing system for physical metal there. The goal of this whole thing is to be able to process transactions completely outside of the LBMA, that is the London Bullion Market network. Perhaps another keyword for today, one that also runs like a common thread through our webinar, is independence, right? That's also an important word. And now we're talking about this SBMA, not LBMA. And whoever controls this clearing naturally controls the liquidity, determines where prices are actually established and where they're headed. And it signifies a historic power shift in the global market for gold. Because just a few years ago, over 80% of all physical transactions were processed through London. 80%. Today, it's less than 60%. I mean, that's quite a statement, right? And that's where Singapore has an important say in the matter and is gaining importance daily. What does this mean for you, for the investors? I'd put it this way. Capital seeks stability. That's why, of course, a lot of capital also goes to Dubai, where my dear colleagues are sitting today. But we're talking about Singapore right now, which is another important place for stability. And where does stability arise most? Naturally, it's where property is secure, protected, legally protected, and isn't attacked, right? And since we now live in a world that's politically already heated, with sanctions where things are frozen, you never hear about them being thawed, do you? Money, have you ever heard of money being unfrozen again, right? You only ever hear that it's being frozen, right? You just imagine it like, whoa, it's being frozen, but what's really behind it, you know? It's a power play, and people want to break free from these little power games and plays. Independence is the key word. And political interventions, people naturally want to become more and more independent from those. And physical independence provides a strategic advantage. And that's exactly what Singapore offers. It's neutral, it's transparent, and it's also very efficient. It is, without falling into any cliches, of course, mainly inhabited by Chinese people, right? They just live, it's just called Singapore, but there's also an efficiency behind it, which the Chinese are particularly known for. Let's put it that way, right? And because of that, it's a location that is, of course, also respected by the West and utilized by the East. And capital flows, as we've already heard, from London to Asia, among other places, and of course from Switzerland to Asia as well. Maybe not as much now as in 2007, 2008, but still. And Singapore shows all of us that the future of money is becoming physical again. We've heard that today as well. And gold will play a central role in this future. Anyone who stores their gold in Singapore, which is also possible with us at Goldvorsorge, in our high security storage facility, is part of this shift. You are independent of banks. You are politically neutral and legally secure. And these are also the latest standards for asset protection. Yes, take advantage, dear viewers and listeners, of these opportunities in a changing geography of trust. I'll say it again because it's so beautifully phrased, the geography of trust. There you have it. So we offer this to you. Get in touch with us if you're interested. We also have Singapore in our portfolio for you.
Indeed, Singapore, one of the best known and most popular storage locations for our storage clients. Now we've heard a bit, capital shifts play a major role there. And yes, wherever there are capital shifts, we know that the topic of debt is also always a very hot topic right alongside it. Currently, we're noticing that the losers of these entire power shifts, for example, the US, are heavily affected. Mr. Dragiljevich, how bad is the US debt situation? The US debt situation, really?
Yes. For that, could the control room please show the previous slide again? Please? Yes, exactly. That's the right one. So yes, how bad is it all? Yes, I don't want to beat around the bush. Today I took another close look at the whole thing. I look at it daily. For the viewers out there, there's a fun feature on Google if you type US debt clock into the search bar, right? The debt clock, right? You can follow the US debt live every day. So that's also quite fun. And for the first time in history, the US national debt has surpassed the 38 trillion US dollar mark. And within 5 years, the debt has risen from $23 trillion to a staggering $38 trillion. And that's despite record revenues and rising interest rates. You have to imagine that. So the United States is borrowing more and more money to service old debts, not to create anything new. And that is the definition of a structural debt trap. And with every further interest rate hike, the pressure on the national budget grows. Because by now, around 14% of all US government spending goes solely into servicing interest payments. And that's more than for defense, education, or infrastructure. This means that just to service the interest payments, you need 14%. And for decades, US government bonds were considered the risk-free interest rate or as a safe anchor. But if even this foundation begins to falter, the entire system loses its orientation. And investors, meaning large investors, are beginning to doubt whether a currency based on perpetual debt can actually be safe. And the answer from many institutional investors, which you can also see in the numbers, is unequivocal. They are looking for counterbalancing assets, and that means precious metals. More and more central banks and large asset managers are realizing that government bonds are no longer a safety instrument today, but a political risk. And this development is leading to a silent but noticeable shift in power, because capital is no longer automatically flowing into the US, but is seeking new places of stability, such as Switzerland, Singapore, which Christian mentioned, or the United Arab Emirates, where I am sitting today. These countries then become hubs for real assets, while the classic role of the dollar as a safe haven loses its strength. And that's why more and more people are also fleeing to the mentioned countries. And for the US, this means not only a loss of trust, but in the long term, also a loss of its capital base, because capital is no longer flowing into the US. And when markets realize that new debts can no longer cover old ones, a spiral begins that can hardly be stopped. And in this world, gold is the solution. The more money is created, the more valuable that which is limited becomes. And the mark of $38 trillion marks a new era, you could almost say, an era in which investors must once again distinguish between paper and possession. So from that perspective, we'll soon even reach the $40 trillion mark. I can imagine that happening in the next 6 months. So that's why you should position yourselves in time, because real assets are the protective shield against a debt policy with no intrinsic value. And the US dollar has no intrinsic value. And that's exactly why gold is considered the ultimate balancing asset for a financial system that can no longer be saved or repaired. And it is also your own personal balancing asset for a truly secure and stable life, or also for genuine freedom and independence.
Now we've already heard US debt, a huge problem worldwide. It doesn't just affect the US, but other countries as well. Every investor has to factor this in and see, okay, everything will eventually trace back to gold or precious metals in the long run. One also reads currently, for example, Mr. Tinker, that large pension funds are also finding their way to gold. What's the story there?
That's right. We're back on the plane, flying further east. I'll tell you in a moment where we're landing. Just a quick comment on what Nicola said, because he mentioned trillions. Those are dramatic numbers. In America, or in English, that's called trillions. They say, well, their billion is what we call a milliard. For them, it's trillions. And I always think of Scrooge McDuck and Mickey Mouse and all those stories where they talked about these absurd numbers. And now that's reality. So it's fascinating. A small side note about these numbers that you can't even really imagine anymore. So, dear viewers, but now we're just about to land, and that is in Tokyo. We've flown all the way to Japan, and now we're going to take a closer look at what's happening over there in this fascinating country. Because in previous webinars, we've already talked about how pension funds in Europe got into big trouble because of the bond crisis. And as a result, many pensioners or future retirees might lose, or at least not receive, part of their pension. They go under, yes. And this story fits in perfectly now, because we're now in Japan. The Japanese are very smart. They look ahead. And once again, the topics we've already had a few times today are coming up. Specifically, we're back to a significant change, a quiet, not secret, but significant movement that is becoming more and more established in Japan. And it also, just as well, you mustn't forget, Japan is still one of the largest economies in the world and has a huge influence. So this movement could, in the long term, also completely change global capital transactions and flows, with all the effects that come with it, and that will also affect us here in our cozy West. For the first time in history, Japanese pension funds are structurally increasing their gold allocation. And what at first glance sounds like a side note is a real, yes, a paradigm shift, a change in worldview, so to speak, in the investment strategy of institutional investors. And this is mainly about the pension funds. So you mustn't forget, Japan has been struggling for decades with negative real interest rates, a very difficult economic situation, a very weak currency. And yet inflation is now rising because, of course, imported goods are becoming more and more expensive. And so for long-term capital managers who have to look after the security of millions of people who will soon be retiring, they have now turned to gold. And they know that paper money alone is no longer enough to guarantee this stability. Our politicians could take a leaf out of their book and, in a very unbureaucratic way, surely open up to gold for pensions. Yes, because in the big pension debate that's also happening in Germany right now, you don't hear any creative new proposals that perhaps at least a portion of income could be offered tax-free for investing in gold. That would be something you could perhaps solve the whole pension crisis. But yes, that would be too easy if it were too easy to solve. And probably no one there listens to me anyway. So back to Japan. They have, of course, an investment fund as well, a government pension investment fund, and of course, other large investment funds. And they are actually starting to permanently include physical gold positions in their portfolios. And I congratulate them. That's a very, very smart move because it means that gold will become a permanent part of retirement planning for Japanese pensioners or future pensioners. And that means they won't lose everything if there's a crash because they will have the gold. And it will then be even much more valuable than it is now. And if even conservative Japan is buying gold, please, it's a signal to the whole world. We've heard it before. Now we're talking about it again. Paper assets are losing purchasing power. And the big money, the institutional money from pension funds, among others, is moving with enormous force toward gold, yes. Hopefully with us too. Hopefully we don't sleep through it. What's developing in Japan right now is very, very positive news. Because they have to deal with a lot of negative news, which makes this all the more positive, yes. And it could be a domino effect. If other countries follow this example, then of course the demand for gold will also immediately increase by hundreds of tons per year. Let's see how that affects the price. Gold, one must say, fulfills the same functions as bonds. In the past, pension funds, that was the classic investment in bonds, which was considered safe. But gold fulfills the same function with one difference. But gold has no counterparty risk. And in a world where government bonds are broken anyway after the zero interest rate phase, as we've already discussed in detail in our webinars, you can sign up, you can listen to all of it, the old but not outdated recordings where this was discussed, what the situation with bonds looks like today. So gold is replacing these bonds. And the Japanese decision is a really, really great decision. You can only congratulate them. It's a turning point in the perception of gold, away from being just a safe haven in crises and toward being a central building block in modern asset management. And these large pension funds recognize And dear listeners, as boring as this may sound, this is really about the future and the pensions of all of us, yes? Sooner or later, it will affect us all, hopefully, because we all want to grow old and enjoy it. And the large pension funds in Japan recognize that gold protects purchasing power across generations. And dear private investors, take this as an example. If you invest in real assets early on, so to put it plainly, a few grams of gold here, a few grams of gold there, regularly, that's what matters, the regularity, then you profit from this structural shift. And don't postpone it yourself, but get started. You don't have to start with a huge amount, but just do it, yes? And follow the example of these large pension funds in Japan who are really planning for generations ahead. And of course, I must cordially inform you that at Goldvorsorge, you can securely store physical gold. And this offer is, of course, being used more and more by institutional investors as well. So Japan is another truly positive and notable example in a world where there are many problems.
Yes, very interesting. And because at the beginning of Mr. Tinker's contribution, Scrooge McDuck came up, I just had the production team tell me, no, that's an outdated cartoon character. There are new ones now, Bluey and Peppa. But that's just a little joke on the side. We'll continue, of course.
My generation.
Exactly. We're already a little bit ahead of schedule by a few years.
Okay, good.
Or the production team is at least.
I'll have to read up on it.
Yes. Yes, let's get back to the topic. The pursuit of security is, of course, very, very important, yes. The markets are showing one thing, and technology is also continuing to advance. Now, perhaps a slightly more serious topic for Mr. Draguljevich, namely cyber attacks. They've become very prevalent and need to be taken seriously. How safe is our money, really, at least digitally?
Yes, well, thank you very much for bringing up this topic. Especially in this day and age, it's a very, very important topic that we definitely need to talk about. Because we often talk about inflation, interest rates, de-dollarization, debt, etc., but hardly ever about what holds the whole system together: trust in digital infrastructure. And it's precisely this trust that is being tested more and more often these days, because the modern financial system doesn't consist of vaults and cash, but of networks and servers, data, or algorithms. And it's fragile, vulnerable, and dependent on electricity and code. And attacks on this infrastructure have increased massively in recent years and will continue to increase massively in the years to come. And in most cases, the companies or institutions are not prepared, as they often only invest in security measures after the attacks, as this glass jar on the right-hand side also shows. And for over a decade, these attacks have been piling up, showing just how closely money and technology are intertwined. Let me give you a few examples. In 2012, Operation High Roller was launched. This was an automated attack on bank accounts worldwide, in which around 78 million US dollars were stolen. 2 years later, in 2014, a massive data theft at JP Morgan Chase followed, a big player. And in addition to 7 million small businesses, 83 million customer data records were also affected by this attack. In the same year, the Karbanak campaign began, which many are familiar with. Banks in Russia, China, and the US were infiltrated, ATMs were manipulated, and transactions were altered, resulting in the loss of billions of dollars. Billions! In 2016, hackers also attacked the Bangladesh bank via the SWIFT network, stealing $100 million. And last year, that is in 2023, the Evolve Bank in the US even became the victim of a hacker attack affecting 7.6 million customers. And these examples show precisely that it's not just individual accounts, but the infrastructure itself that is the target of all this. And the more networked the system is, the larger the attack surface becomes. And today's interdependencies and partnerships and all the things we're told about, open banking solutions, interfaces, they increase this complexity and with it, the risk as well. So the risk lies less in the market itself, but in the system. And the question is always, what happens when the financial system actually goes offline? When digital access is no longer available, for example, to bank accounts. In such a scenario, short-term liquidity is separated from long-term assets. And through cybercrime, an annual damage of over $6 trillion is caused. And that's $11.4 million per minute. You have to imagine that. You can also see it on the left. And digital assets can be blocked, deleted, and even moved. For example, the numbers in a digital bank account. And physical assets, gold, silver, so precious metals, stay where they are in high security storage. They function independently of electricity, code, or access data. You always have access to your physical reserves. And gold becomes the analog backup, so to speak, for the digital system. And governments and corporations are, of course, already reacting. They are investing billions in quantum-safe encryption. But until they can even implement this system, the gap remains, or rather multiple gaps, because the attackers, they don't wait, They are always looking for opportunities. And the cyber attacks of recent years are the warning signals. And they remind us of what is possible in a digital world and what is yet to come. And physical gold cannot be hacked, cannot be deleted, cannot be frozen. And therefore, everyone should think about how much they really trust digital solutions.
All right, thank you very much. Digital vulnerability is truly underestimated, you have to admit. It's not something you hear about often. You often read in the media about bizarre and highly dramatic events that have all taken place digitally. Mr. Trinker has prepared a fitting example for this. We still need audio. So I'm back again. That fits perfectly with what Nicola just told us about this digital story, something that, of course, can't happen with gold. And what I'm about to tell you has nothing to do with me perhaps not being a friend of cryptos, but it's truly newsworthy. I don't know if you've generally heard about it in the media, but it was an absolute shock for the financial world. Actually, just very recently, more than 1 million crypto investors were, so to speak, expropriated within an hour. They lost their entire fortune that was invested in cryptos. The reason for this was that it was what is commonly referred to as a so-called stable coin, and it was believed to be backed by gold reserves. However, it was later discovered that the gold reserves were actually all counterfeit. Instead of physical gold, the investigators, this was in Asia, found that gold-plated tungsten bars had been deposited. Which of course sounds like something out of a James Bond movie, but it's the reality. And it shows how vulnerable trust in a digital asset is when it's not built on real substance, And a digital asset, something with real substance, how those two can truly come together, that's a really good question, isn't it? So the stable coin in question was supposedly fully backed by physical gold. Supposedly, each digital unit was supposed to correspond to a certain weight of gold, and it was then deposited in warehouses in Singapore and Hong Kong, so in Asia. And after the first doubts arose, the great catastrophe came. The auditors discovered that the majority of all deposited bars were counterfeit. The consequence was the coin crashed to zero within a few minutes, trust destroyed. And it certainly wasn't the first time something like this has happened, and also not the first time that counterfeit gold has appeared in circulation. But the bigger problem is a structural issue with many crypto projects. You really have to be very, very careful there. Even though I'm not a Bitcoin fan myself, you can gamble with it in the short term. And I even know people who have made a lot of money with it. But please be careful, all right? Because the structural problem is promise instead of possession. And as long as investors believe that there is a physical asset behind a digital token, the system works. You heard the word, I think just now, believe. Now I think we've brought heaven and hell into our webinar, because now it's about faith that there are also physical assets behind the digital tokens. It's come to that. But as soon as doubts arise, everything can collapse. So much for faith. So offshore storage, missing audits, unclear ownership structures, all of this creates room for a lot of manipulation. Apparently, this happens more often in Asia, especially the discovery of counterfeit bars. They are also sometimes superbly made. From the outside, almost, well, indistinguishable to the naked eye. We at Goldvorsorge test everything. We would spot that immediately. It wouldn't even take a minute, and we would know it's all fake. So it's incredible how carelessly it's handled in Asia, because it's easy to determine whether it's real or not. And the lesson from this, of course, is something I think we've already heard today: real ownership instead of a digital promise. Gold, as you all know, has built trust over millennia because you can see it, test it, and hold it. And digital constructs are just a pale imitation, a copy of physical gold. They essentially dissolve the principle, and the original meaning is long lost. So it's better to have security through ownership. And this scandal shows that only real gold in audited vaults offers genuine protection, and not some blockchain promise on some islands where, sure, it's beautiful and the drinks are good, but otherwise a lot of things don't quite work as they should, perhaps, right? To put it nicely, whoever gives up control of their property ultimately gives up control of their future, and that's what we want to avoid. So the devaluation of this stablecoin, dear friends, is more than just an isolated case. Be careful, it's a warning signal, not just for all crypto investors, but for everyone who believes that you can digitize everything, right? There must also be real tangible property, right? That's the case with physical gold, and it's also independent of trends and technologies, because technologies become obsolete too. But gold doesn't need technology. And in the end, the only thing that remains is what truly has weight. And gold has weight.
Yes, that's absolutely right. But it's still shocking. What happens when digital trust collapses, right? And that brings us directly to the next question, Mr. Dragoljevic. What does the quantum revolution mean for the security of digital money?
Yes, it's definitely very, very dangerous. Yes. And the big players are right at the forefront, like Google, because they've just developed a new quantum computer. And this time, it really marks a technological turning point, because this computing power is incredible. Because with this kind of computing power, which can perform billions of operations can be carried out in seconds. And this technology is reaching dimensions where classic encryption is hitting its limits. I spoke earlier about cyber attacks, and with these quantum computers or quantum technology, we've now reached a whole new level. And digital signatures as we know them, blockchain structures, and bank encryption could soon be much easier to decrypt than ever before. And as I mentioned earlier, I talked about the cyber attacks and the amounts that were stolen, and the future will, of course, be quantum technology. And I've also done a bit of research on this quantum technology and the quantum computer. The quantum computer doesn't work with the classic bits we're familiar with, but with qubits. They can calculate states simultaneously, and in doing so, achieve exponential speeds. This means Google's new system is achieving stability across several hundred qubits for the first time, a level of performance that supercomputers haven't been able to reach so far, and of course leaves them far behind. And this computing power naturally opens up new possibilities. In important areas, it's important to add for medicine, for materials, for research, but also for AI. At the same time, you also have to consider that it threatens the very backbone of digital security, cryptography. Algorithms that protect banks and government systems today could theoretically be cracked in hours or days as soon as this quantum hardware is scalable enough. This means digital assets live on the trust in their code. And if that trust ever breaks, all that's left is what's tangible. And that's why we're talking more and more with analysts as well. And they also say, or rather, we also say that a physical counter movement to digitalization is the right solution. So gold, silver, and other real assets, which serve as an analog backup to this virtual financial world. And a quantum attack on central systems wouldn't just endanger data, but also liquidity. I mentioned the amounts earlier, and banks could be temporarily offline, blockchains could be reorganized, and digital assets could simply vanish, and citizens will simply no longer have access to their financial assets. And in a world like that, physical possession will once again become the ultimate insurance. Governments and corporations are already reacting. For example, the US Department of Defense is now investing billions of dollars in post-quantum resistant encryption. Banks and crypto platforms too, I should add, because Christian also described this earlier regarding crypto. These platforms are, of course, also beginning to upgrade their systems. However, this transition takes time, perhaps even years, or maybe even decades. And until then, this gap remains. And that window of time between technological progress and practical security will, of course, still be there. And it's precisely in this phase that physical property, what you can actually touch with your own hands, not just see digitally, becomes important again. And from that perspective, the quantum revolution is no reason to panic, because it will naturally continue to evolve. It's still in the early stages of it all, but it is a wake-up call. Just as, on the other hand, the US dollar and its high levels of debt are a wake-up call for us now. The quantum revolution also shows, of course, just how far technology has actually advanced. And in a world where computing power determines security, physical gold will become even more important, because the future doesn't just belong to code, but also to what endures. And what will endure, of course, is always physical gold, what you can hold in your hands tomorrow, the day after, or rather every day, and what is valuable. And the quantum revolution will naturally be developed further in the coming years, and is, of course, on the other hand, a very, very interesting topic.
Absolutely. And yes, it also has a bit to do with the topic of security again, and reminds us how important unity and control over such systems are. I believe we can relate this whole thing one-to-one back to precious metals. Authenticity and security play a decisive and important role there, don't they?
Of course, that's very, very important. One must always keep that as a top priority, as a guiding principle. What Nicola just told us makes it's a bit unsettling, because somehow for all of us, in reality, it's already very difficult to understand what quantum computing really is and all that it entails, the dependency, the kind of dependency you get into. And in contrast to that, the physical, that which has intrinsic value, which cannot be digitally manipulated. There's something to that. But I think everyone has recognized this common thread by now. And it's super interesting. Nicola, thank you very much for giving us a good overview. I'll jump to the next topic. Earlier today, we heard the story about this stable coin with the counterfeit gold bars as collateral. And I'd like to briefly follow up on that, on this topic of counterfeits, because, of course, in recent years, there was actually, you hardly heard anything. There were no really big scandals in the precious metals market. If there were any, they were covered up. If so, it was mainly in Asia, because Asia is known for it. So mainly China, actually. If there are counterfeits, then there are these tungsten counterfeits. I have also explicitly assured you, you can have this tested yourself in any of our branches. Experience it firsthand, I'd almost say. We can detect such fakes immediately. Yes, it would never make it into our system. But the topics of manipulation, counterfeiting, and then these offshore storages that we've now heard about with stable coins, they remain present. Because the gold market is, of course, not a closed space of a single entity. but it's also global, it's complex, and of course, it's also built on trust, yes, and experience and trust. And those are the most sensitive points of this whole story. There's the entire value chain, starting with production. There's gold and silver and platinum. Those are all physical assets. There's the path from mining to the refinery to storage. There are many interfaces. And theoretically, each one can be a risk, not because the market is disreputable, but because you can't guarantee worldwide transparency and control for all companies, but only we in our company, for example, can guarantee that because we have established all these measures and mechanisms right from the beginning. So something like that could never happen with us. You can see examples there on the chart. The bottom one is interesting. You can't see it very well right now, but just imagine a bar of chocolate that's wrapped in foil. And let's say that today the foil is not silver, as is usually the case, but gold colored. And then there's the chocolate inside. And if you look where the chocolate should be, that's where the tungsten core is. And all around the thin foil is, of course, gold anyway. But if you upgrade, yes, it's gold. But if you test properly with our testing equipment, it's clearly a counterfeit. So that can be ruled out immediately. You don't need to worry about that with us. We take care of that and always guarantee it. But of course, these reports about the fake trains keep surfacing. You can see it at the top of the slide as well. Real and fake and real and fake. And who knows who is genuine and who is fake? The gold supplier knows this, as he can determine it immediately using the testing device and not by looking at it or by buying it on eBay and other platforms that are not suitable for gold. Only buy it from an established, trusted retailer. Okay, now I'll extend the scope a little further. I have now explained the tungsten cores to you. It looks real from the outside. Inside, however, there isn't even chocolate, but tungsten. However, they are relatively rare. I don't want to cause any panic here, but it's interesting to talk about it as well. It's definitely a reminder that control is crucial so that you know where to buy it, who you trust. And of course, there are other dangers on the market as well. Market manipulation is also a topic when we talk about these fakes, about market manipulation, price fixing by large banks, or targeted movements in the markets with futures contracts and so on. But there's not much you or I can do about it. This puts humanity's trust to the test. I'll say that quite honestly. But the real lesson is that the risk is not the market itself, but rather the partial lack of control over ownership. Therefore, those who own gold do not need to fear scandals. They simply need a reliable and effective system, a system that clearly assigns ownership, a system where everything is thoroughly verified. With such a system, they can have confidence and know they have made the right decision. Yes, indeed, so much for the authenticity of the precious metals. There are many counterfeit products, but relatively fewer genuine ones on the market. One topic was now real.
Perhaps we can broaden the scope and move on to the topic of demand. Mr. Draguljevich, there's been a lot to report on that topic in recent weeks. What's the key factor?
Yes, just a quick word on the previous topics. There are many more, let's say, risks that are very important for private investors to consider, yes? Not just the possible counterfeit bars, which are mostly found on the secondary market or are offered there, but also cybercrime. These are risks we naturally point out, and you're welcome to contact us, as Christian also mentioned, so that we can, let's say, either test the bars or provide support in other ways. Yes. What about demand? Yes. Well, the demand side is very interesting, a very current topic. Specifically at the end of October, India, yes, the Diwali festival, which most of us know. That's actually a good fit, moving from risks to, let's say, something celebratory. And it fits quite well. I spoke about this very event with many investors and entrepreneurs here in Dubai. And That's quite special, yes. So India in general, by the way, is in 8th place among the countries with the largest gold reserves. And now back to the Diwali festival. Shortly before the Indian Diwali festival, the demand for precious metals normally increases, historically speaking. It's a very traditional setup. You can also see it clearly in the left graph. Actually, that's the wrong graph. Hold on. Basically, let's just skip the graphs. Although, yes, the right one, the right graph. So my mistake. So exactly in the right graph, you can clearly see the blue line. Yes. And every year, India has higher sales figures just before the end of the year. And this year, I mean, you can see it after 2014. It's completely different. Yes. So the combination of the cultural demand and the economic expectations and what's happening geopolitically has created a dynamic that goes far beyond normal conditions. You can also see the blue line shooting upwards, yes? And Diwali in India is not just a religious, but also an economic event. It symbolizes, for one, prosperity, light, and renewal, as they also define it. And gold and silver, physical gold and silver, are an integral part of this symbolism, so to speak. And silver jewelry in particular is experiencing an extreme wave of demand during this time. And in recent weeks, imports to India have increased by over 40%. And traders are talking about a silver season, the likes of which we haven't seen in years. And yet that's only the visible side of the market. Behind the scenes, capital is moving globally and strategically, right? Because while Asia, like India, is celebrating, Western central banks are gradually lowering interest rates. And these rate cuts are triggering a global wave of reallocations. So away from interest-bearing securities, as we've already mentioned, and towards real assets. And silver benefits twice here. On the one hand, as a precious metal, or rather as an investment metal, and on the other hand, as an industrial metal. And so the sentiment in the markets has become significantly more optimistic towards silver, because investors see silver not only as a hedge against inflation, but also as an opportunity for growth, because silver is a key material in modern industry, from solar energy and electronics to batteries, AI solutions, and so on. And so when both investors and consumers buy at the same time, what we're seeing now emerges. A rally, like in India, for example, that is supported by multiple factors. And it's no longer driven just in the short term by holidays like the Diwali festival or interest rate decisions, but is carried by a long-term shift in demand. And global silver consumption is now around 680 million ounces per year. And for the 5th year in a row with a deficit between supply and demand. And this gap isn't getting smaller right now. On the contrary, it's growing, especially due to such demand in the large countries or from the BRICS nations. And what does this mean for you as an investor? On the one hand, in the short term, the market can overheat from this above average demand, as we've also seen in recent weeks. Afterwards, however, in most cases, there are corrections or recovery phases again. But in the long term, the fact is supply is limited and is already in an annual deficit. And this will continue to drive the price upwards. Keep in mind, we have the Diwali festival every year at the end of October, November. And so anyone who thinks beyond these holidays recognizes that silver isn't little gold, but is an independent asset with industrial significance and above all monetary potential, which will become even more important in the future.
So thank you. Yes, the Diwali festival, India, very interesting. As you may have noticed, I'd say we've now got quite a bit of knowledge ready at this point in our discussion. Let's take another short break from our two experts. Now, at this moment, let us bring our new face to the stage now, and please join me in welcoming them. That is Mr. Ulrich Hanten. As I said, he is the branch manager in Dubai, and we will take a closer look at this special hub, which is becoming increasingly important. And Mr. Hanten will be presenting this to us. Please go ahead.
Yes, thank you very much, Stepan, for the invitation. Today I'm going to tell you a little bit about the development of GVS in Dubai. But first, a little about myself. I have been working for 12 years for the companies of the GVS Group. In my early days, I looked after storage clients in Vienna. Then I was in Tallinn for 4 years, entrusted with the expansion of the Northern European business. After that, for 1 year, I toured very intensively through various GVS branches. I always worked there for a month with the aim of understanding the local requirements and conditions in order to then develop a plan with management for the further development of each branch. Since November 23, I have been living in Dubai and am responsible for our newest branch here in the Golden Diamond Park. We all know that capital flight from Europe is in full swing, and we have been experiencing and shaping this trend for 10 years by expanding our storage network. Even back then, our goal was to find safe, economically liberal countries with stable governments, where an infrastructure for trade and high-value logistics already existed in order to offer our customers purchasing and storage options there. That started with Singapore back in 2016. There we entered a market that operates very professionally and were surprised even then at how smoothly everything runs there. This was positive not only on an operational level in cooperation with our partners. Our customers also showed very strong demand for the location, and that's when we realized that we need to integrate further alternatives here in the long term. So we repeated this in 22 with Dubai. The war in Ukraine was certainly the specific trigger for that. But we had actually had it in mind since the health crisis in 2020, when it was already becoming apparent that Europe would handle it worse than other regions. As we are approaching the end of this monetary system with great strides, it is obvious that people will always be looking for a safe place for the gold they have earned. And that's why we have made it our mission to look for solutions and also to make our customers aware of them. My first trip to Dubai was almost exactly 2 years ago. At that time, I had the exciting task of integrating our new branch and the high-security warehouse into our GVS ecosystem. After overcoming some cultural and bureaucratic hurdles, we succeeded, which means we now have a regular workday with established processes. What do I mean by hurdles? Of course, there's a bureaucracy here that you have to learn. Compared to ours, it is largely digitized. The most curious story or regulation was probably that we arrived here at the branch with our European alarm and security system, installed it, and then wanted to use this alarm system for the official security inspection. When the inspection appointment was scheduled, it was made clear to us that we needed to have a locally certified alarm system where the interfaces to the security service and the police are automatically included. We were happy to comply, and now we have 2 alarm systems in operation here. We added the second one. So now we are the most secure branch in the GVS network, which is desirable, but only necessary to a certain extent, because the Emirates are one of the safest countries in the world, ranking among the top 15 on all security and crime indices. And there's a reason for that, because the penalties for breaking the law are draconian, and you absolutely do not mess with the police here. Even for traffic offenses or disagreements, you have to be extremely careful and always be respectful. The customs regulations are also quite demanding. They made it necessary for us to develop a completely separate workflow, including IT tools, so that we can carry out the valuable goods transports here correctly and, above all, on schedule. Efficiency and process automation are particularly important to us here because this year alone we have already flown dozens of valuable goods transports for our storage customers. And we are very pleased that this location is being so well received. The Emirates have been growing tremendously since the discovery of oil in the 1960s. but until recently, people didn't immigrate primarily for the quality of life, but because of the low to non-existent taxes. There's just a 5% value-added tax here, and that's only been since 2018. There is no capital gains tax, no income tax, and there is a 9% corporate tax on profits starting from the equivalent of 95,000 euros. The ruling family has used the proceeds from oil very intelligently since the 1960s. It wasn't just that the entire infrastructure was upgraded with roads, hospitals, and schools. The money was invested all over the world. But the most important thing was always to diversify as broadly as possible within their own country. This started with the creation of the first free trade zone with the aim of creating the most attractive conditions possible for businesses. Today, in Dubai alone, there are 20 industry-specific free trade zones with laws optimized for each respective sector. In the financially oriented free zones, for example, it's noteworthy that British common law is valid. This provides a framework that's much more familiar to international companies, allowing them to use their existing know-how for a much easier entry into the business world. Another focus, as is well known, is tourism. Anyone who's been here knows the famous sites and buildings. Now, huge initiatives in the real estate sector are also being added. And that, of course, is a strong attraction for expatriates because there's the opportunity to get a 10-year residence permit, a golden visa with a certain real estate investment. Through this investment strategy, the UAE and Dubai in particular are so well developed that low taxes are no longer the main motive for immigration. Today, it's much more about the good quality of life, the cleanliness, the safety, and also the efficient services. Among our current clients, there are also many who have already emigrated here or are preparing to do so, for example, by simply opening a bank account here, which is also possible. With all these investments, you might think the Emirates are heavily in debt. But that's not true. Thanks to the booming economy and the influx of wealthy and working people, the national debt to GDP ratio is only at 35% and has been declining since 2020. By 2030, the forecast is even 26.6%, and they are already among the top 30 countries worldwide. The main reason I came to Dubai was a great curiosity to see how other countries are organized, what works better, but also what works worse than back home, and also the curiosity to get to know clients from other regions that we would never have been able to win over in Europe. The most interesting client story was when we had two sisters here in the office. Both of them are residents of Dubai and have their own companies. Their citizenship is Sri Lankan. Their father was a successful entrepreneur in Egypt who had recently passed away. And he had left each of his daughters an inheritance in the low 8-figure range. The client onboarding process in this case was quite interesting with regard to our due diligence obligations. You see, in Dubai, we also have to carry out due diligence. And among other things, we had to request an Egyptian death certificate and an Egyptian court order. And we also had to have extensive discussions with the Egyptian bank before the money was finally transferred to us. In the end, everything worked out well, and these clients ultimately received their gold in the high security storage facility. So what can we expect here in Dubai in the near future? In closing, I can also report that about a month ago, we established our own company here in the UAE for the high security custody of precious metals. Until now, within GVS, only one company was responsible for the storage. And we are now supplementing that offer with another company that is also based here in the UAE. The final preparations for the business operations are still running, but from January 26th, you will have the opportunity to organize and process the storage of precious metals with a GVS contract partner here in the UAE. with all the services you already know, such as integrated online trading, a German-speaking department for transport inquiries, relocations, and so on. That doesn't play a role at the moment, as our companies do not report to any official registers even now. But you never know what the future holds, and our motto has always been, especially in the interest of our customers, to be prepared for anything that happens in the world. Thank you very much. That's all from me. I'll hand it back to Stepan.
Yes, thank you for the magnificent insights into the Dubai branch. It's very interesting to take a little look inside the branch. I myself don't have all the pictures, or they are not known to me. Really great and interesting. We'll continue with our experts. Mr. Draguljevich and Mr. Trinker, please bring them back on stage. We still have a few topics ahead of us. The next topic that we're starting now, we had a bit of demand, but demand always comes with bottlenecks. That's the other side of the coin, and we're seeing that too, Mr. Draguljevich, right? Sorry, I don't think Mr. Trinker is covering that topic.
Exactly. Well, that's actually, we can do a tandem jump, but I've already prepared some very interesting information. And actually, if one of the topics today that we're presenting perhaps causes a little bit of panic, this topic could make you sweat a bit, and maybe not without reason, or well, long story short, the Swiss refineries are reporting bottlenecks. So what does that mean? Yes, my dear ladies and gentlemen, Switzerland is considered the heart of global precious metals processing. Around two-thirds of the world's mined gold passes through Switzerland. Yes, they pass through Swiss refineries annually before they then enter the market in the form of bars or coins. So two-thirds annually. So if from there, where two-thirds of the annual volume, I'll say it again, passes through, if reports of delays and bottlenecks come from there, then that is an important signal for the entire market balance between physical supply and demand. That is a clear statement about what's happening right now. The situation is that these are all LBMA accredited, and several of these LBMA accredited refineries, so Valcambi, Pampi, Argo Heraeus, all household names, so to speak, as they say. They are currently reporting extended processing times and delivery delays, in some cases of several weeks. Officially, of course, this is being downplayed a bit with maintenance, logistics, and increased security checks, I'd say. But behind the scenes, the numbers do point to a real supply shortage in the physical market. So it's very, very important to know this. The shortage isn't happening suddenly. It's the result of an ongoing discrepancy between the paper market on the one hand and the physical market. While on the exchanges, yes, virtual gold worth, yes, gazillions, I would almost say worth billions of dollars is traded daily, the demand for physical precious metals is in fact steadily growing. And the effects on the real world are such that both institutional buyers, meaning states as well, and private customers who want physical delivery, yes, they are literally causing a traffic jam in processing. In Switzerland, there's a traffic jam on all the gold roads. Please announce it on the traffic report. The average processing time for standard bars is now about 4 weeks, so 1 month. Special mintings or small denominations are sometimes on this processing line for even longer. There are some dealers who are also reporting bottlenecks for 1 ounce gold coins, and also, of course, what follows from delays, increased premiums. That is higher surcharges, the prices you pay for production and for buying from the manufacturers. So a classic sign that physical demand has overtaken supply. And if even in Switzerland, one of the most efficient and safest gold locations in the world, the processing time is increasing, it shows how tight the physical market has actually become. So it's getting tight in the physical market, and the physical shortage is not just a logistical problem, but a leading indicator for price movements. Whenever the physical market gets tight, the price, of course, also rises in the long term. It's not because of speculation, it's not speculators who are at work here, but because the very foundation supporting the price is real, yes. The current situation reminds me of phases from, yes, the financial crisis of 2008 or also 2020. You know what was going on then when short-term bottlenecks in refining led to sharp increases in prices? Back then, we had actual lines that went through the whole building with waiting lists because gold was actually sold out. So folks, this is a real thing and it can happen again. And some of the writing on the wall points towards such a development. So while the financial market is hoping for things to ease up, the refineries and manufacturers are saying something completely different. So gold continues to be not just a hedge against inflation, but also proof that there is real demand for real assets in a virtual world. So when physical metal becomes scarce, it's not because it's disappearing, but because it's being held. Gold is being held. And the reasons for that, we've already heard several times today, and we'll hear them a few more times.
Yes, the scarcity is now clearly being felt, and precious metals are truly in demand in almost every sector, as we've just seen. For example, in the energy sector, Mr. Draguljevic. Yes, that's right. And regarding the bottlenecks Christian mentioned, a quick addition. Since I'm the head of trading at Goldvorsorge and am in daily contact with the mints, here's a little inside information from my end. Yes, we are currently dealing with bottlenecks time and again. But on that note, I have to say we are among the top 3 distributors for all international LBMA mints. And of course, because of that, we also have long-term supplier agreements with the mints, which naturally ensures that our quantities are secured. And that's why we also always have enough in stock for you in all our international branches, including here in Dubai, which we've also heard about earlier. And that's a bit of an insider's perspective from my side because I'm always discussing these things with them. For instance, here in Dubai, I met with several mints again, including Valcambi, yes, from Switzerland. But even so, our quantities are assured. However, you have to take into account, as Christian already mentioned, there are always turbulent times, which can then perhaps lead to longer waiting times. But from our side, here's some reassuring information. Of course, everyone will get their turn, yes, even if it takes a little longer. But we've naturally always planned ahead and have sufficient stock on hand. A quick addition to that. The energy crisis is the energy sector, or rather the energy crisis is a very important point. And here I'll bring Europe into the picture because Europe is once again facing a tense energy situation. Since the beginning of the year, gas prices have doubled. Yes. And of course, we all feel that. Looking ahead to the coming winter, there's also growing concern about further bottlenecks and regional power outages, yes, blackouts. However, this crisis is different from the one in 2022 or 2020 because back then the focus was on supply, yes. Today, it's more about the long-term consequences that arise from it. And while many countries have filled their gas reserves, the costs for it have exploded, and all of this is being passed on to the citizens. Companies are struggling with production stops, consumers with record high bills, and politics with growing pressure on social and price compensation mechanisms. And the energy dependency they wanted to overcome is now showing itself in a new form, not geographically, but structurally. A crucial side effect of this crisis is the renaissance of industrial metals, in this case, platinum and palladium, because these metals are suddenly experiencing a surge in demand, mainly due to the expansion of hydrogen and fuel cell technology. You can also see this here on the left in the pie chart. The energy transition is accelerating, and with it, the demand for the metals of the future, in this case, platinum, the demand for platinum. And the energy market is thus becoming a catalyst for the raw materials market as well. Platinum is indispensable for hydrogen electrolysis, for example, and for fuel cells. And silver is the central factor for solar cells, batteries, and semiconductors. With rising nervousness, the pressure on central banks naturally grows as well, because energy prices act like a second inflation engine, and this engine has to be slowed down somewhere. In this critical scenario, it's therefore a clear conclusion that precious metals will continue to reach new records in the future. And because energy, as we know, is the foundation of every modern society. And if this foundation starts to wobble, or if we suddenly have no heating or electricity, then people naturally seek security, and often in other countries, like here in Dubai, for example, because here they don't worry about energy costs or other things, but about the prosperity of the citizens. And that's why Dubai is now also among the top 3 storage locations for our clients.
Mr. Hampton also mentioned that earlier. So the energy crisis isn't a short-term exceptional situation, but rather an additional risk. And the diagram also shows, for example, that platinum inventories in Western Europe and in England have declined sharply since around the year 2000. That means a lot of platinum is being used. And at the same time, platinum imports are also rising significantly to compensate for the dwindling domestic inventories. This means that most countries had high platinum inventories that they've used up over the years, especially due to the resulting energy crises. And now the time has come when they have to increase imports, that is platinum purchases, in order to balance out these dwindling domestic inventories. This means you always have to consider energy and precious metals together. And that means if we have crises in the energy sector, this naturally has significant effects on the precious metals market, positive effects, of course, in terms of price increases. And when energy policy and confidence are simultaneously under strain, precious metals always win. Yes, thank you. That was the industry dependence on metals, which is readily apparent there. Now, we've just heard a lot about platinum and palladium. What about silver, Mr. Trinker? We still need the sound, please. So the director still needs the sound then, Mr. Trinker. Yes, otherwise I could maybe do sign language, but I think then we would let's not even start. Well, what I'm talking about now fits perfectly with what Nicola has already told us. He also used the words critical for silver, I believe. And that's exactly what the Americans did. They classified silver as a critical metal. That means it might not be a perfect translation, one has to say, because critical in German might have a slightly different meaning than in English, but it's meant as systemically important, systemically relevant. Yes, and it goes like this, exactly on August 26, 2025, so that's now just under September, October, November, 3 months ago, the US government made this decision. And that has sustainably changed the global commodity market, or rather will continue to change it. Silver has been officially classified as a critical metal for the first time. Well, unofficially is something else, but officially, I would say it's something like systemically important. So really, it's very, very significant. And this is justified, of course, by the American economy's growing dependence on silver in key industries. Keywords here are, of course, technologization, solar, electronics, and semiconductor production. Silver is so multifunctional, it's incredible. This metal it's simply far too cheap for what it can do. And this classification is more than just a political signal. It gives silver the same strategic status as some other friends we know well, lithium, cobalt, or rare earths, which we've already heard about today, the vitamins. The immediate consequences were already seen on the market right after this classification. Since the announcement, the major warehouses on international exchanges have recorded massive outflows. Because we are in a genuine supply shortage, this is not a speculative phase. It's very important to make that distinction. The structural consumption by industry has exceeded production for years, and the new classification by the US exacerbates this trend. Because in this new world order that's currently taking shape all around us, silver plays a dual role. It's an industrial metal, number one, of course, and at the same time a store of value. We also say it's a substitute for money. In the industrial sector, the solar industry, for example, is very important because it's needed for photovoltaic cells. In the electronics and chip industry, it's irreplaceable because of its incredible conductivity. And I could give you 1,000 other examples, but just for fun, go and look up all the places you can find silver, you know. It doesn't stop with food or cosmetics, and not even with healthcare, you know. It's really, silver is amazing, multifunctional. But even if the economy isn't so strong, the demand remains structurally strong because the demand is primarily driven and anchored by technology. So this recognition of silver as a critical metal, which highlights its growing importance in modern industries, means that companies really have to restructure and adjust their supply chains accordingly. Support programs are being created, stockpiling is happening, and strategic reserves are being built up. Additional silver, everyone needs even more silver. Physical, of course, yes. And the combination of the political classification, the real deficit that actually exists in the market, a real difference between what should be there and what is, and a growing investment demand has made silver one of the most dynamic commodities for the year 2025. I know many people always complain, well, silver isn't going anywhere, blah, blah, blah. Well, just take a look at these charts and then look at where silver was. And I remember a time not too long ago when you could buy a master box for under 10,000. Those were the good old days, long gone now. And the journey continues upward with the price. And the analysts, yes, they are already talking about a possible strategic bottleneck. Again, comparable to the disruptions we saw with lithium a few years ago, yes. Only, of course, silver has a much broader industrial base, so you can't really compare them anymore. And for investors, this means that physical silver as a real hedge and a commodity of the future is naturally gaining importance, and the price increase won't be a short-term trend, ladies and gentlemen. Instead, a structural revaluation is on the horizon, yes. Seize the opportunity because this metal is underestimated. It's been said so many times, but it's actually true. It is underestimated. And especially if you have money that you might not need, again, in the short term, then invest it in silver and be smart. Save yourself the value-added tax. Store it in our bonded warehouses. We've just introduced some nice colleagues, Mr. Hanten in Dubai, for example, who can help you there. Or as we heard today, Singapore. It's also wonderful to invest there in bonded warehouses, or even Switzerland, good old Switzerland, that also plays an important role. But save yourself the VAT and buy a little more silver instead. And you'll profit too, because the silver price, in my personal opinion, the silver price, we haven't seen anything yet. Yes, you ain't seen nothing yet, as the Americans always say. And with that, I'll conclude my assessment of the topic of silver for now.
Thank you very much for that. We're already moving on to the next topic. We're also a bit behind schedule. We need to slowly get to the question and answer session that the viewers are eagerly awaiting. Perhaps one more thing on the last topic, silver. It's in high demand in industry, but it's not just industry. It's also the defense spending that's generating these strong capital flows. And what's the situation there, Mr. Dragoljevich? The defense industry is also on the rise.
Yes, in a way, it's also a very current topic because in recent months, many countries have announced massive increases in their defense spending. Voluntarily, that's the question now. Well, yes and no, because NATO is in the background again, and NATO is demanding a budget of up to 5% of the gross domestic product from its members. And that's a level Europe hasn't seen since the 1980s. And for Germany, that would mean an additional 200 billion euros in debt. And yet, what at first glance looks like defense policy is, in reality, a gigantic economic project. And with every euro that flows into armaments, the balance shifts between security, inflation, and the demand for raw materials. Because armament projects mean more demand for energy, metals, and manufacturing capacities. But on the other hand, one must also consider that this leaves fewer resources for civilian sectors or other important projects. And gold is not being used as a currency reserve, not as a currency reserve, but increasingly as a means of payment in arms contracts, yes. That is the clear function of gold in this industry. And especially in, well, rather the new function, especially between states outside the Western Bloc. We've heard this, for example, with Russia and so on. Parallel to this, the demand for precious metals from the armaments industry is also increasing. That is not only from the energy sector, which I mentioned earlier. And in this case, platinum also comes into play. And platinum is one of the most used metals in modern military technology. From fuel cells to sensors to missile guidance systems, platinum is used in large quantities in all of these. And in the current year alone, the price of platinum has risen by more than 60%. And military spending is not a classic investment. It doesn't create productive capital afterwards. They are additional costs in an uncertain world. That means more money has to be printed. And these costs, of course, then rise faster than any individual economy. And that, of course, drives prices up again and reinforces inflation. And the question here is, how do you finance this security at all when the money itself isn't stable? Yes. And many states are giving a clear answer here through precious metal reserves. And this military boom shows how closely security and the economy are intertwined. And yes, at this point, one has to say, peace is priceless, but security costs money. Yes. And anyone who wants to afford it today needs the real assets of gold, silver, and platinum in physical form to be able to cover it all.
All right, thank you for that contribution. That brings us from silver to the armaments industry. But the crucial question is, where does the fast money flow when things get really serious, Mr. Tinker?
Yes, when things get really serious, then we have to make sure that we've hopefully already bought it. And we're talking now, I think we've arrived at the hedge funds, haven't we, correct?
So we're on hedge funds, and the hedge funds are switching, I believe, to real estate.
Exactly.
And that also has to do with physical raw materials again. Perhaps you can explain that to us in a bit more detail.
Exactly. So earlier during our trip around the world, I talked about Japan, where these large pension funds are now bringing in gold, yes, and no longer the dollar or any bonds. And you have to see that development in parallel. That's one trend in Japan. And the trend is, of course, very similar among the large hedge funds, which, whether you like them or not, is another matter. But they are also represented in many pension funds. And these hedge funds, this is very important, are switching from real estate to physical raw materials. And if I may elaborate a bit, in recent months, various market observers have uncovered a remarkable shift in the global capital market because more and more large hedge funds are literally pulling capital. They're practically sucking it out of the real estate sector and investing instead in physical raw materials, above all gold. The fact that they're doing this doesn't surprise me at all, because with the real estate market, we're once again at a limit where a bubble could really perhaps actually burst. Yes. There are dramatic statistics from the US, but I won't go into those now because I don't want to talk about real estate. Just that these large hedge funds are now bringing in gold, yes. What at first glance looks like a tactical reaction to interest rates is actually much bigger. It's a strategic reorientation by the, whether you like it or not, largest capital managers in the world, yes. So they've really thought through what they're doing, yes. Why not real estate anymore? Because the era of predictable returns, first of all, is coming to an end. You can't plan for it like you used to. Real estate is suddenly, overvalued and dependent on an interest rate structure that can hardly be politically controlled anymore. I think we'll get to that in our questions today. Maybe one or two of you can ask us a bit about that so we can elaborate a bit more. The big funds recognize that real estate is becoming increasingly risky, and gold at the same time is becoming more and more attractive. and it has once again reclaimed the role it has had for centuries, that gold is the ultimate liquidity reserve. Unlike real estate or bonds, physical gold is not dependent on the credit markets. We've heard that a few times today as well. It's not subject to any probability of default, no counterparty risk, and of course, no political interference, like freezing and unfreezing assets and whatever else can be done to money which doesn't affect gold. Gold is a currency neutral anchor of value. It is liquid, it is universally accepted and independent of government finances. And when the so-called smart money moves, then yes, then private investors like you and me should pay attention. The shift from real estate to commodities, in this case gold, signals the structural revaluation of assets. Capital is no longer flowing into speculative financial products, but into real, tangible assets. Energy, metals, land, of course, water, gold, and gold is out of its niche. It's no longer a niche, but once again, a solid part of global portfolios. And if there's something you can learn from this, it's to follow the money of the professionals before the masses do, because by then it might become so expensive that it's already sold out.
Absolutely. Thank you very much. You can really feel this shift toward real assets in society as well. At least that's how I would put it. How do households and savers notice this in their everyday lives, Mr. Draguljevic?
In this case, Christian already mentioned it earlier this evening. It's especially about pensions, that is retirement. Earlier, I spoke about Europe and about the military budget being increased. And now I'm going to focus on one country, Germany in this case. Germany is quite literally at a turning point, one that didn't happen overnight, but has been building up over years. And then there's the pension crisis. And the pension crisis is no longer just a headline. It has now become a reality, and worldwide. If you look at the whole situation, calculations show that the pension level will, in the long term, drop to just 35% of the last net salary. And that means that those who are working today will hardly be able to live on their pension alone in the future. At the same time, the structural burdens here are intensifying. An overburdened social system, a shortage of skilled workers, and stagnating productivity. These are very important issues that many countries in Europe are also affected by. And in recent months, there have been nationwide strikes in key sectors of infrastructure, transportation, the energy sector, and other industries. And what basically started as a wage dispute has developed into a kind of societal symptom. Because many people feel that their own lifetime achievements are being devalued or will continue to be devalued in the future. On top of that, of course, comes fiscal pressure, because government debt is also reaching new record highs in Germany. And of course, tax revenues will then stagnate. And a possible technical state bankruptcy can no longer be ruled out. That also needs to be said. And a particularly alarming signal would, of course, be the sale of national gold reserves, which currently amount to around 3,000 tons in this case. However, this could eventually be the last resort to get out of such an inflated system. And this crisis, of course, also has industrial consequences, because silver, which is heavily used in electronics, solar, and medical technology in Germany, has already seen a drop in demand of over 20% in Germany. And that's very interesting, because while other countries are seeing record purchases in the silver sector, it's exactly the opposite in Germany. And that's a clear sign, of course, that investments in future projects in Germany are being held back. But for us, it's important to note that such a crisis also brings clarity, because people then naturally start to consider other solutions and forms of security. In this case, of course, real assets like gold and silver, property, or tangible assets. And that means the balance will naturally shift somewhere in the future. And those who take action early, of course, create stability for themselves outside of these state crimes and no longer have to worry about a pension crisis in the future.
Great. So declining purchasing power changes investment behavior. So Mr. Trinker still has the controls on.
Yes, here I am again. Sorry.
You still had your audio on, so I was hearing myself twice. But let's continue. Exactly. We had just stopped at households and savers. Now let's move on to the purchase of physical gold and storage, which is becoming increasingly important again when it comes to buying. What is the trend here, Mr. Trinker?
So I believe, dear Mr. Bilic, we're talking about Switzerland now, right?
Exactly, that's right.
That's right. We're now on our incredible journey, though not in 80 days, but rather in 3 hours around the world. And we've now arrived in Switzerland, where we can gladly and with much enthusiasm report. Switzerland is actually seeing a strong increase in bank independent safe deposit storage. That means in Switzerland, something is shifting once again at the moment, quietly, but not secretly, quietly, but noticeably. Capital, specifically away from the banks and towards bank independent safe deposit storage, more and more. And we know this not only from these reports by all these experts, but we also know it from our own experience, because we have a wonderful presence also in beautiful Switzerland with a beautiful branch near Zurich, close to the airport. And we also offer a wonderful high security storage facility, including a duty-free warehouse, all completely independent of banks. And that's why we know what we're talking about. And now I'll get back to my point so I don't lose the thread, because in Switzerland there's a trend
away from banks towards bank independent precious metal storage. So to put it simply, more and more private individuals and of course institutional investors are choosing to store their physical precious metals outside the traditional banking system. You really don't need to say much more to figure out why. Demand for private high security storage has basically increased by more than a third in Switzerland over the past 12 months. However, many investors have also experienced that in the past, banks have only been accessible to a limited extent during crises, liquidity shortages, or perhaps even under political pressure. Or in other words, well, on Monday, the bank is just closed. But since so much is already digital these days anyway, it's really not comparable one-to-one with what happened in the past during bank runs. All you really want is access to your stored precious metals at the bank. But trust in institutional custody at banks has become fragile. Anyone who owns physical assets like gold and silver doesn't just want to own them, but also store them properly. And please, dear listeners, don't get me wrong. We love banks and their safe deposit boxes. They're perfect for your documents. No one has ever stolen documents from safe deposit boxes. But for precious metals, people turn to bank-independent high-security storage facilities. At a time when trust in paper assets, digital assets, and banks is simultaneously declining, physical ownership is once again becoming a symbol of freedom. Switzerland is showing where the trend is heading, away from banks, away from institutionalized trust, toward controlled ownership. Those who own real assets and store them independently hold not just precious metals, they hold sovereignty. Take advantage of this opportunity. I've already told you, we also offer bank-independent high-security storage for gold in Switzerland, as well as duty-free storage for silver. All of it outside the banking system. This way, you control your property and protect yourself from unforeseen access and other political risks. And by now, you know how to reach us. Goldvorsorge.com is a good place to start. We look forward to hearing from you.
Yes, that covers high security storage. Switzerland is a very important and highly regarded storage location and international hub. And indeed, the desire for genuine security is quite clear. Especially with silver, due to its significant weight and considerable volume, secure storage is a major and ongoing issue. What is the current market situation for silver, Mr. Dragoljevich?
Yes, as I already explained earlier this evening, the demand for silver has risen enormously, especially from the BRICS countries. And we know that silver is usually overshadowed by gold, and yet it is currently experiencing one of its strongest phases in over a decade. In October, the price surpassed the mark of $52 per ounce. and that means an increase of over 70% since the beginning of the year. And here, congratulations to everyone out there who has stored silver and owns silver. The trigger for this rise is a combination of dollar weakness, massive industrial demand, and of course, market shortages. And while many are still focused on gold, something is happening with silver that could be structurally even more significant. Because silver is a metal with two faces, on the one hand, an investment asset, and on the other, an industrial metal. And especially in industry, we are seeing explosive demand, particularly from high-tech sectors, photovoltaics, and e-mobility. Battery technology, all these industries consume amounts of silver that can hardly be covered by supply anymore. This often leads to shortages in the market as well. Take a look at the demand in the PV sector on the left side up to 2027. More and more is needed while supply is stagnating because mine production is barely growing and recycling shares are also declining. This means that silver is both driven by speculation and in reality undersupplied. And that's an explosive combination. That's why it's all the more important to recognize this now, and especially now with the current price correction we're seeing in the market, to buy in again or to get started. But when it comes to silver, there's another very important point for private investors out there. It's also very important, and this was already mentioned in the webinar, the issue of taxes. That means taxes. Silver is subject to value-added tax, but in the duty-free warehouse that we offer, you can also buy silver tax-free and benefit from the 0% rate. This means that silver is not just a byproduct of the gold boom. It is the industrial foundation of a new economy. And in the future, it will become more and more important, whether for quantum technologies or otherwise, radio technology or solar technology. It is becoming more and more important. That's why it's important to act now and seize the opportunity.
Exactly. The silver rally is meeting with scarcity. This is testing all limits, even in industry. Many international companies are also feeling these limits. Are the major corporations already rethinking their strategies there, Mr. Trinker?
Of course, and here we see a repetition of something I already mentioned about Japan with the pension funds turning to gold. This common thread continues on, remaining significant and ongoing. The corporations, the multinationals who are now also using gold primarily for currency hedging. This always comes back to the term emerging markets. In these countries which have great potential and are now realizing it for themselves, so to speak. So, especially in these countries, gold is now increasingly being used to secure transactions. It's also very, very important to understand this. There are also many multinational corporations that are active in these countries, especially investing in the global south. And these multinationals are now using gold not just as an investment to hoard, but actually as an active hedging instrument against currency fluctuations. And especially in these countries of the global south, the so-called emerging markets. According to a recently published report by the well-respected Wall Street Journal, many companies in Latin America, Africa, and Asia are using gold in order to stabilize their cash flows against inflation and often fluctuating exchange rates. So gold is being used as a hedge, so to speak. And the local currencies of these emerging markets are actually losing purchasing power rapidly, often accompanied by high inflation, and this has nothing to do with gold. Double-digit inflation is no longer an exception, but often the norm. But companies that have subsidiaries in Argentina or also in Turkey or Nigeria, although these three countries are all at very different levels, but that doesn't matter. This means that for these subsidiaries, revenues and expenses can fluctuate dramatically as soon as they have to deal with these local currencies and then have to convert them into euros or dollars. And that's why these companies now hold gold reserves as a cash reserve. And when inflation rises in these respective countries, the gold price in the local currency usually rises as well, completely offsetting the loss of purchasing power. This way, the subsidiary's financial ability to act is maintained. stable even if the local currency fluctuates. And this approach is especially widespread in resource-dependent economies, where revenues are already heavily influenced by export prices. So here it should be mentioned that in parallel, there is this development with the BRICS countries, which we've already heard a lot about today, and this will further intensify and probably restructure the whole situation to make these countries less dependent on these multinational corporations. I would wish that for them. In any case, here gold acts as a universal balancing element. When currencies fall, gold rises. And the financial distortions balance out. That means there are no more of them. And this development also signals a mental shift in corporate financing. Gold is once again, as it was in the past, being understood as an operational currency hedge. This is similar to earlier trading times when precious metals were simply the most reliable standard of value. Everything was measured against gold and sometimes also against silver whenever there was an exchange between different countries. And in a world like today, where monetary values fluctuate, gold remains the factor that brings stability. And that's why you should do as the professionals do, as a nice advertising slogan once said, do as the professionals do, and add precious metals to your portfolio for additional stability. Yes, that's the new shift in thinking towards gold. But it must also be said that this has its effects because you can feel it in trading as well, Mr. Draguljevic. The price formation is completely different.
Yes, that's right, exactly. So in trading, this is also a significant point, especially when you look at commodity trading between countries such as China and Brazil, because this trade, as we've already seen, is increasingly taking place without the dollar. And between China and Brazil, a quiet but very significant change is taking place in global trade, because more and more commodity transactions such as oil, soybeans, metals, and rare earths are no longer being settled in US dollars, but rather in the Chinese yuan or gold. What at first glance might seem like just a detail is, in reality, a historic turning point. Because here too, you can see that the dollar is losing global interest and its exclusive status as the world's leading currency. And China and Brazil, as a current example, are among the largest trading partners in the Southern Hemisphere. And China imports raw materials worth over 100 billion US dollars from Brazil every year. Above all, iron ore, oil, and agricultural products. And for decades, payments for exactly these raw materials were processed through New York, through dollar hubs. Meanwhile, more and more contracts are being settled directly in yuan or through gold-based mechanisms via gold transfers. The background is the growing concern among countries that they will remain politically and financially dependent because of the dollar system. As I have already mentioned, the US dollar is increasingly being used as a financial weapon or as a sanctions mechanism. And the control of these international payment channels, especially through the SWIFT system, enables the US to effectively enforce these sanctions and financial blockades. And China and Brazil want to reduce this dependency and are therefore using other alternatives, such as direct payments in Chinese yuan or through gold. And of course, this also lowers transaction costs. And this also reduces exchange rate risks and creates independence on a political level.
Great. So there's a lot happening in trade as well. Price formation is becoming more intense. It's extremely interesting, gentlemen, how we've been able to observe so many changes in recent weeks and months. And with that, we'll move right into our Q&A session. Before that, from my perspective, the most important topic, Mr. Trinker, if as a private investor you have decided to buy gold, what are the key things to keep in mind when making a purchase, just in general terms?
Exactly. So thank you very much, dear customer. You've already taken the right and most important step. You've actually decided to buy something because that's always the most important thing. Talking a lot and doing nothing gets you nowhere. Now you've made your decision. You're buying gold. So what do you need to consider when doing so? Believe me, it's super easy. It will give you a wonderful, simple, so not complicated investment life. If you do it smartly and don't just think about the price right away, many people buy precious metals, but they're put off by the price. But in reality, there are other factors that are much more important, which determine the long-term success of such a strategy. And in fact, it's the denomination, the availability, of course, and the quality of storage. In other words, the right connection to your precious metal. You could say the right connection to your precious metal. So by denomination, I mean that you can start investing in physical gold even with the smallest amounts. You can also buy 1 gram bars, which are currently available for under 140 euros. Or you can start with 10th ounce coins, which are a bit more expensive. But just set it up so that you buy once a month or once every 2 months, but do it regularly. That is very important. But small denominations, because small denominations not only allow you to get started symbolically, but they also give you a lot of flexibility in the future. Because if you buy in denominations and in stages, and at some point you want to sell something again, prices have usually already gone up. You are always able to act. You always have a bit of room to maneuver. In 80% more or less of private investors opt for a flexible structure. Of course, for good reason, because in times of rising prices, they can easily sell small denominations. You can't just cut the big bar into small pieces. In that case, you have to sell the huge bar again. And I think I'm repeating myself. I've said this very often, that you really shouldn't do that, but instead go for the small denominations. Availability, well, of course, buy while it's available. It's available, gold is here now, so do it now. You've already made up your mind anyway, come by and then come by again the following week and do some more Christmas shopping. And that way you'll very quickly change your whole perspective on the matter, because you'll already own gold and you'll feel it. It just feels different somehow. You can only really say what that means if you actually own gold yourself. The quality of storage is, of course, very important. What does that mean? It's about having the right connection to your gold. Of course, you can stuff it into your socks at home, but then grandma or mom might come along and one day they throw out the old socks and the gold is gone too. Or even worse, other things could happen. So please store it in a high security vault. Gold only truly serves its purpose if you have the right connection to it. In other words, if you can access it at any time. And of course, independently of banks. That's exactly what you get with us at Goldvorsorge. You have this one advantage, bank independence, but you also have 50 more and even more than 50 additional benefits, because we offer you the world's most secure high security vault. And we've already put together 50 advantages, which we also present to you on our various platforms. And more are being added all the time. So there are many, many, many reasons to choose this storage facility.
So anyone investing in precious metals shouldn't just look at the price, since that changes all the time anyway, but also at the structure behind it. How is it divided up? Where is it stored? And who guarantees its authenticity? Of course, the professionals who are always testing for authenticity. And that's how you've built real asset protection for yourself. And now I'm looking forward to your questions.
That's exactly right, Mr. Trinker. I'd like to thank the experts for the wealth of information today. I think we've never processed so much information as we have this evening. Thank you for that. And let's not waste any time and get right to the first viewer question. Or actually, I should use the plural here, because I'm taking the first question, which was asked particularly often today, probably already in the double digits. The customers are interested in the following. On focus.de, you can read about Italy's gold tax plan. What would you do if something like that were to happen in Austria and Germany as well? Perhaps I'll direct that straight to Mr. Handen.
Yes, thank you very much for the question. First of all, it should be noted that Italy has a different tax system than Austria and Germany. In Austria and Germany, the sale of physical gold and silver is exempt from capital gains tax after a holding period of 1 year. That is not the case in Italy. So, in Italy, there is a capital gains tax of 26%. It doesn't matter when you sell, even after 1 year. Then in Italy specifically, the following regulation also applies. If someone sells gold but cannot provide verifiable proof of origin, then the 26% tax is applied to the entire sales proceeds, not just the actual profit. That's why many Italians who may have inherited gold or bought it over the counter are hesitant to sell it and simply keep it under the radar. And now the government wants to make an offer to these people. Specifically, they say, declare your gold holdings to us by June 2026 and pay a levy of 12.5% of their value. This can be paid within 1 to 3 years. And what do they get in return if they declare their gold? If they sell it at some point in the future, then for the calculation of capital gains tax, not the entire sales proceeds will be used, but rather the calculation will start from the point when they disclosed it. So a significantly smaller margin for calculating Italian capital gains tax in the future. Yes, you just asked what we would do if this were to happen in Austria and Germany. So these are two tax systems that simply can't be compared to each other. In Austria and Germany, it's the law that after a 1-year holding period, it's tax-free. That's why this offer, this adjustment law, doesn't really apply at all. And it's also very unlikely that anything will change in that regard. This example, and the example already shows, it is important to always keep the receipts from your gold purchases. No matter whether it's an over-the-counter transaction or not, you should always keep them.
Yes, thank you for the extremely competent answer. Let's continue. Will the BRICS gold currency really displace the dollar in 2026, or is that just more hot air, Mr. Draguljevic?
Yes, so we actually hear this question again and again, almost on a daily basis. And even here at the trade fair in Dubai, at the conference, it was also a very exciting topic. And the answer is no, so the dollar won't disappear tomorrow, but it is slowly bleeding out or being displaced, I would say. 68% of BRICS trade is already conducted without the dollar. And in Rhineland, the BRICS unit is backed by gold and will also be introduced as a unit of account in 2026 or 2027. This is also officially stated in the BRICS documents, and it's no longer a conspiracy theory. And for Austria, this means quite specifically, it's important to move your assets, especially your own assets, into these countries because you can also see the weakness of the dollar. And the dollar is being pushed out more and more. That's why these countries are also important trading hubs or even safe havens, for example, like here in Dubai. Dubai is also a key player in this market, which is why it's important to be active in these markets, especially, for example, through high security storage and also by storing your own precious metals here.
Great, thank you. Is it true that workers in Dubai are exploited as much as the media reports, Mr. Anten?
Yes, thank you. I'm glad you asked that question because Dubai is very popular and markets itself very well to the outside world. Very well to the outside world. But there are also points of criticism, and those need to be addressed as well. Immigration to Dubai is currently very high, spanning across all income levels. And in particular, many people come from various countries in Southeast Asia who simply do not have good or adequate living conditions at home. So there is no supermarket and they don't have heating, water, or any prospects for the future. In Dubai, they earn many times more than in their home countries and can support their families back home much better with these wages than if they had stayed at home. Many of these workers come without any qualifications because they are needed. Dubai also takes in these workers, and even though their salaries aren't much by European standards, they can still send some money back home. Immigrants with qualifications earn a normal wage here anyway, and specialists sometimes even earn much more than in Europe, where, as is well known, the state takes a large share. Work is very much at the center of society here, and that's also because Dubai doesn't have a social welfare system. So if you don't work here, not only do you not get unemployment benefits, you also have to leave the country. It's important to say that the system is the same for everyone. You have low or no taxes, but also no social welfare system. That's why there's a lot of pressure in the job market and when looking for work. So there's also wage dumping downwards. But the advantage is that the economy is booming and economic output is being generated. A lot of positive things are happening in the country. These domino effects have good effects. And in other countries in Europe, you need taxes to keep the system alive. Every country has its own systems and has to make sure to improve them. The Emirates are doing this too, for example, by building a lot of new housing and recently reforming the salary payment system. So overall, you have to look at it in a nuanced way.
Thank you for your assessment. Silver has risen by 60%. Is it going to drop again now, or will it keep going, Mr. Dragiljevich?
Very good question. Actually, it's even more than 60%. So no, it's not going to drop. Of course, in the past weeks and months, we've seen spectacular price increases. And here, a brief pause for breath is also important. So I wouldn't define this as a crash right now. And it's precisely these pullbacks that are important for investors, especially for private investors like you out there, because the big institutions quickly take advantage of these price corrections. And as I already mentioned earlier in the webinar, for 5 years now, we've had a supply deficit in silver. Solar plus electric cars alone consume 25% of the total. Production and all the inventories are currently at a 30-year low. And the USA has even officially classified silver as a critical metal. And as I mentioned earlier, many countries are currently buying up explosive amounts. And those who take advantage of pullbacks now are basically buying the cheapest insurance. And at the same time, they're buying into the growth story of the next 10 years because the supply is limited and can't simply be increased. That's why the big companies, meaning the large industrial firms, are now buying up silver in large quantities and even storing it as reserves in their warehouses. And that's why with attractive prices right now, you should buy silver duty-free in a bonded warehouse, save on VAT, and of course, benefit in the future as well. Benefit in the future from even higher price increases.
That was the assessment on silver. Let's move on to US debt, which is also a topic today. 40 trillion in US debt. Is this really the end of the dollar, or are we exaggerating now?
So we've been getting this question for years, of course, not with 40 million though, as has been said in various comics and not just comics, but actually spoken about like this in America. But ever since the 40 trillion mark was broken, the debt has, of course, continued to explode. There's no end in sight. Do you believe me? That means we live in a very computer-oriented era. Everything is digital. We've already heard about quantum stuff, quantum and something else. So it's really not much of an art anymore. These quantum computers and whoever else can easily just add another 40 trillion on top of that. So it's going to keep going, and this trend is likely to continue for the foreseeable future. I don't see any end in sight right now. But of course, it's true. If you followed my webinars or our webinars, you already know that we're in an exponential phase of development, which means things are accelerating rapidly. So please don't panic or worry unnecessarily. The end always comes anyway. One way or another, just like in life, sometimes a bit faster, sometimes a bit slower. But just stay relaxed and buy gold and silver as your shield of protection. And whether the next 40 trillion come next year or only in 3 years, it doesn't really matter because the money supply will have doubled either way. That just means everything will be twice as expensive and inflated, and you've lost everything except gold and silver. Yes, if you've put your future into paper assets, that's not so great. Just my personal opinion. Instead, follow my personal opinion. Go for gold and silver because that's how monetary systems have always worked worldwide. And eventually, even the dollar will be worthless, and even Bitcoin will one day be worthless. And now the Bitcoin fans will send me hundreds of emails again, just like last time when I said this. But that's just my opinion, and I'm allowed to express it publicly. I have the right to do so. In the short term, Bitcoin might still have potential, but in the long run, it will have no value. And of course, neither will the dollar. So stick with tried and true gold and silver, the classic choices.
Exactly. Speaking of gold and silver, a viewer wrote to me a few days ago and pointed out that we should also talk a bit more about platinum. I hope we managed to do that today, dear viewer. Nevertheless, we're also going to include a question here that has been asked quite often. Is platinum really that important for green technology, or is it overrated, Mr. Draguljevich?
Yes, very good question. And in this case, platinum, actually, there is very little reporting about platinum. Today, I made it the main topic on the site that we report a bit more about platinum and palladium. Thanks also at this point for the platinum question. Is it important for green technology or for technology in general now, or is it overrated? I would actually say that platinum is currently still undervalued because normally platinum was always more expensive than gold, sometimes even twice as expensive. Currently, it is significantly below gold. Why is that? Because for years, the automotive industry was the main buyer, especially diesel catalytic converters. With the decline of diesel in Europe, demand has dropped somewhat. But the hydrogen revolution, as I mentioned earlier, is just getting started. And of course, quantum technology and fuel cells also require a lot of platinum. That is, of course, another booster. China and Japan are investing billions in such projects in this case. In addition, 70% of the world's platinum production comes from South Africa and Russia. These countries are now also struggling with delivery difficulties. As a result, demand can only be met to a limited extent. And these are exactly the indicators for further price increases in the future, as we have already seen this year. Platinum is needed, especially for green technology. Green technology is also an important point for the future, and the precious metals industry is naturally investing in it as well, in green gold. You can also find this on our website. We offer it as well. And of course, to come back to platinum here, we recommend including platinum in a portfolio as well. And therefore, if you already own gold and silver, we naturally also recommend investing a portion in physical platinum. Here too, an important point. It is subject to value-added tax. So the solution here as well is the bonded warehouse. Contact Christian, he has the perfect solution. Or contact Mr. Hanten in Dubai, they have the perfect solution for you. In the bonded warehouse, you save on taxes and of course also have a nice platinum portfolio alongside your other metals.
Yes, wonderful. I think that was explained really well. And I'll just quickly jump in here because this question comes up regularly. And my short answer is also that platinum is not overvalued. On the contrary, most people don't even realize yet how critical platinum is. But of course, there are also alternatives being researched. As of today, there is nothing that can replace platinum in fuel cells, which are important for hydrogen, at least not economically. Catalyst stories are unique, but we'll see how things develop. Because the EU wants to have 1 million hydrogen trucks on the road by 2030. Each one needs 30 to 50 grams of platinum. Please calculate that. Japan is also planning something similar for $15 billion. China is also planning 1,000 hydrogen filling stations. So things are happening. And my recommendation, if you want to diversify, is to go with 60% gold, 25% silver, and maybe 15% platinum, just as Nicola suggested to you. With us, you get everything from a single source, so to speak, from the best source. Thank you, Nicola.
Thank you, Christian.
All right, that was about platinum. Let's continue. Gold ban. What happens in the event of a gold ban like in 1933 in the USA, Mr. Handel?
Yes, that question comes up very often. There isn't much to suggest that a gold ban will happen again because in our globalized world, it's simply no longer
feasible. Scheduled air travel has increased so much that anyone can travel with gold or store it in a decentralized way, or ship it via armored transport. That's why something like that simply wouldn't work at all. It would be much more transparent if a wealth register were introduced and then citizens were simply asked about it. But anyone who is worried about a gold ban is already well protected with the high. That's actually the main point, to choose high security storage outside the EU. because then it's immediately out of the jurisdiction where something like that could be feared. Exactly.
Indeed, Mr. Trinker also reports on this very often. Next question. To what extent do you see a coexistence between gold and digital currency, or will gold lose its significance, Mr. Dragoljevich?
Very good question. Actually, the opposite is true. It will gain in significance. And to that extent, no one really wants to have a digital currency. We also explained earlier what risks are associated with it, except for governments, of course. And the more digitalization is forced, the more will be invested in gold, in physical gold. And that's a very simple formula. And we can already see this happening in many countries. For example, as I recently read in India, they are, of course, also planning the digital rupee, and the demand for gold, or rather the demand for precious metals there, has exploded. And that's no coincidence, because in payment transactions, digital money is naturally used. It's convenient, fast, and practical. But when it comes to investments, asset protection, and security, precious metals are at the very top, the tip of the iceberg. And these are, of course, two completely different worlds. Digital is meant for consumption, gold is for wealth and security. But on the other hand, as I mentioned earlier, things are shifting. For example, by now, most countries are also using their elemental reserves, that is, their gold, as a means of payment. That means even for consumption, it's no longer just digital, because many people don't want digital, but rather the physical. And at GVS, of course, we see this every day as well. Our customers, of course, pay digitally, but they buy physical gold. They use apps, and of course, they also use their phones, but most of them store their physical gold in high security vaults because they want to move away from the digital. To put it briefly, the more digital the world becomes, the more valuable physical gold gets.
Thank you. Next question, which I think is quite interesting and important. I find it shocking that a young academic family I know, a dentist and an architect, can't afford to buy a house. Can you offer a bit of optimism, Mr. Trinker?
Of course. I really feel for the two of them. I'm not a dentist myself, but I'm in the same situation. But the fact is, we're simply in a system that works the way it does right now. You have to understand that. That might not be a very clear answer, but I'll get to the point. There's no point in exploiting poor people. You don't get anything out of that. And the rich, I'm not talking about the dentist here, exploiting the truly wealthy doesn't do much either, because there aren't that many of them, or they're already in such a position. They're so clever that you can't get anything from them anymore. So who does that leave? Of course, bravo, the middle class. And you, dear Mr. Dentist, and you, dear Miss Architect, you are the middle class that is being exploited, because that's smart. The system knows that. And that's why the system does it. And that's why it affects doctors and architects, because that's the middle class. That's where you can get something. And we live in such a system, so let's not pretend we're surprised. This monetary system has come about the way it is now because of the exponential money printing. That's something you have to take into account. In previous webinars, we brought up the game of Monopoly as a comparison. And you can't play Monopoly and then be surprised that you have to pay a lot for a property and maybe even more for a developed property and so on. And at some point, only one person wins, and then the game is over. And we're getting closer to that time. That's the game cycle, and in reality, it's not much different. But I can sincerely raise a toast to both academics. It will change again too. Please just wait a little while. In the meantime, interest rates were brought down to zero, and that's why everything is completely mixed up. Everyone is over indebted, everything is financed on credit, but that will be sorted out again. Just wait and see. You're still young. It will be sorted out. For now, just live in a rental apartment. That has its advantages too. You don't have any stress that way. You can also move again easily and flexibly. And with the money you have left over, buy gold. And I'm not saying this because I sell gold, but because it's the right decision. And silver too, as far as I'm concerned, because at some point the system will be reformed and first real estate prices will keep going up. But there will come a time when only those who really have money, like their gold, for example, will be able to buy real estate cheaply. This has happened many times in the past, and it will happen again. And especially if you're a young couple, this will happen at the latest in the middle of your life. Be confident, enjoy your life, and for now, just rent. There are also beautiful rental apartments, so don't stress yourself out. Set some gold aside, and eventually, real estate will be available at giveaway prices.
All right, that's all about real estate. Next question, what concerns should we have regarding the new authority, AMLA, and the resulting surveillance of our assets? Mr. Draguljevic?
Very good and timely question. AMLA, what exactly is AMLA? AMLA is a new creation by the EU, a new European authority for combating money laundering and terrorism financing, officially called the Anti-Money Laundering Authority. And AMLA essentially supervises cross-border activities. It oversees high-risk financial institutions and also coordinates the national supervisory authorities within the EU. That means for at least the next few years, AMLA doesn't really have anything to do with precious metal dealers or private individuals. It's mainly focused on high-risk financial institutions. So there's no need to worry about that. What you should be more concerned about is how much money the EU is pouring into such an authority again, how much more debt they're racking up, and how they're going to raise taxes again. And those are really the only concerns you should have about this newly established authority.
Thank you for that assessment. Now, dear viewers, the last two questions are coming up. It's already very, very late. That's why let's continue. In Dubai, I believe it's already 1:20 a.m. Is that correct?
Correct. Yes.
Mr. Dragoljevic and Mr. Handen already want to go to sleep. So let's wrap this up quickly. Can I also store my gold with you anonymously, for example, with just a password? Or is identification always required?
Yes, that's actually the case. Times are changing, and this kind of anonymity, just with a password, is no longer possible today, is no longer allowed. But I can assure everyone, your data only appears with us. You read a lot of scaremongering everywhere, but we have thousands of customers, and never, I mean thousands, I don't even know how many, and never has anyone ever asked about a customer. Of course, you can stir up a lot of panic now, but it's really not necessary. Of course, we have no idea what might happen in 10 to 15 years. Everything changes, times change, but for those who are worried, the first option is, of course, to set up a high security storage facility abroad, internationally, like in Singapore, Dubai, or even Switzerland. But we always have to know who they are, that's obvious. We always have to know who the real owner is. That's why we always have to have the name and address, or rather, we need to know their contact details, their personal information, so that everything is handled properly and correctly in the customer's interest. This is for their protection, and we make sure that everything remains confidential. That's also required by many laws, protected by data protection laws and so on. So with us, your information is in confidential hands, and at the same time, you can take advantage of international opportunities with our global storage system. By now, you know how to reach us, and let us advise you on this.
Yes, international storage system. At any time, you can set up a storage account with Mr. Trinker or Mr. Handen. They are happy to advise you on that, even after the webinar. How does the dollar-gold exchange rate behave if the dollar drops significantly? Mr. Dragoniewicz?
Definitely a great last question. Thank you very much, Brad, for the tip and for the question directed to me. So there is actually always a correlation here, or almost always a correlation. In recent months, gold has always been strong. And if the dollar falls because the world currency is coming to an end, then the dollar gold price will rise sharply. And in addition, one must consider that investors often flee to gold as a safe haven when the dollar collapses. This, of course, drives up demand again, which in turn increases the dollar gold rate. So overall, a massive dollar decline usually leads to a significant rise in the gold price, or rather, the dollar gold rate.
Thank you very much. One more follow-up question from me. If the dollar exchange rate rises or the dollar weakens, doesn't that make the euro gold price a bit cheaper to buy?
Absolutely right, because that increases demand for the dollar again. On the other hand, the dollar also correlates with the euro exchange rate. So when the dollar strengthens or gains value, the euro loses a bit of value again, making gold a bit cheaper on the market in euro terms. And that's why there's this correlation between the exchange rates.
Exactly. You can buy at a better price. That's probably a good way to wrap up today's webinar. That's something you can take away from this. Getting a good deal is always relative because prices are only going up at the moment anyway. We've also heard that in the last webinars from Mr. Dragoliewicz, so no need to worry about that. Mr. Trinker, Mr. Dragoliewicz, Mr. Handen, thank you very much, gentlemen, for your time and for sharing such important information. I think we've covered a lot today, and I can also see from the reactions in the chat that the feedback is exceptionally positive. Thank you for the praise. We try our best from webinar to webinar. There will also be another webinar coming up soon. You can reserve your spot again at webinar.goldvorsorge.com. Our team will stay on right after this. The registration page is where you can sign up directly for the next session, even if you might not be able to attend live. I've received a lot of emails asking, will there be a recording of the webinar? Yes, of course there will be. You'll receive it automatically by email in the next few days, and you can watch the webinar at your leisure, maybe even at an earlier time, for those who don't want to set aside time so late in the evening. There's also a lot happening on our social media channels. There you can see our latest videos with the experts you saw today, Mr. Trinker and Mr. Draguljevic. And there's always something going on there, Mr. Trinker. You had a wonderful interview this week. I would even call it the interview of the year. He actually interviewed Mr. Mark Friedrich. And for everyone who doesn't know him, Mark Friedrich is a highly renowned financial expert, as well as an author and entrepreneur. And he's also one of the leading voices in monetary policy. And maybe you can say a few more words about that. What can we expect in the coming days when it's published?
It was an incredibly exciting conversation. We really covered all the topics, from the background of deindustrialization to de-dollarization, to how we can manage to get ourselves out of this mess again. And I'm not just talking about Germany, but also Austria and all the countries that feel connected to this, like Switzerland. And we also included a good dose of optimism. A solid portion of optimism was part of it. We really touched on every possible topic, from asset registers to CBDCs. We truly discussed everything. It's really quite fascinating, filled with truly great insights. And Mark Friedrich is a highly prominent and well-known figure with many exciting and widely read bestsellers that he's written, books everyone should definitely put under their Christmas tree, or rather their Christbaum. The interview will be coming to you very soon.
Absolutely, so don't miss out. Social media, we're active on all the major platforms, YouTube, Instagram, and whatever else is out there. Maybe the team can display them on screen. Just follow us and you won't miss the interview or any of our other expert features. Until then, we'll see each other again soon. I send my best regards from Vienna as I say goodbye. Good night. Good night.
Thank you so much for joining us, and see you next time.
From us, good night from Dubai. Good night.